All right, guys. Today, unemployment, non-farm payroll data today. All right, team. So today we have unemployment dropping today. Uh, all right. So yeah, the unemployment rate drops today. Let me show you the expectations. All right, guys. So yeah, so unemployment drops this morning. Expectations for unemployment are for 3.4%. 3.4%. The non-farm payroll data is expected to show up. Well, I didn't even plug my mic in, bro. Hold on. All right, hold on. Sorry. There we go. Be a little bit better. All right, there we go. 3.4% is what they're expected to show up as. All right, guys. What's up, Anil, Dan? 3.4% is what they're expecting. Non-farm payroll is expected at 205, 205K. Unemployment rate for Canada is also dropping today. They're expecting 10,000 uh, unemployment change at 5.1% for Canada. I don't know if it's going to be bearish or bullish the higher or lower it is, to be honest. I don't know if it's going to be good or bad. Um, if it comes in higher or low. I really don't. It could go either way, to be honest. Like, we don't really know what kind of reaction we're going to get from it. Because of inflationary fears, it could be something where we get a higher unemployment rate, and that is worse for market activity. Or it could go the other way, where we get a lower unemployment rate, and that is better. And that is worse for market activity. We really don't know. My guess is a higher unemployment rate will make the market go up, is what I actually think. I think if we come in higher than expected, the market will probably go up, is what I'm assuming here. I'm not 100% sure, but I'm assuming a higher rate means bull market activity. But I'm not 100% sure, and it's not really like a for sure thing, to be honest here. We can only speculate. Oh man, I did jobless claims for my thumbnail. Whoops, that was not intentional. Hold on, let me fix this. Um, There we go. I just fixed it. But yeah, today jobs data and payroll data. That's basically what it is. What's up, Richard? Andrew? Yeah, for sure. Yeah, well, Tuesday CPI, it's the bigger day for sure. By far, it's the larger day. But today's a pretty big day too, man. Yesterday, the market dropped a lot. I'll probably start to scoop up some small positions, especially after unemployment comes out. I'll probably at least start to scoop up some small positions. Um, so bear with me. I'm gonna start my old playlist. We've been listening to the same music basically every day, and so I'm gonna go to an old school playlist that we've had here for a while. It's pretty good. Good old music. Everybody usually likes the old music we have. There we go. Let me know if you can hear the music. You should be able to. Expect a bounce. I'm not sure. I'm going to start scaling into some positions, specifically Disney. I'll buy like 25 shares of Disney right now is what I'm going to start buying. I bought some yesterday and sold it on a bounce. And so I'll probably do that again today and then see if we get some good data. And if not, I'll probably add to it. And then just start to establish a decent position there. Maybe Microsoft is what I'm considering too. We're going to do a poll like we always do today, team. So again, vote there. Maybe Microsoft is what I'm considering. Bullish. So we're going to say bullish or bearish on today's unemployment and non-farm payroll release. Bull or bear, guys? Vote on the poll. We got the poll live. We're also going to be doing a Twitter poll here, like we always do. Vote on that poll. We're rally today. Yeah, I think 50 is I think there's a chance of 50. And I think that's an interesting nuance of everything where I think there's a chance of 50 basis points, like I think. So yeah, I think there's a chance we get 50, but I'm not 100% sure. I don't know if we monetized. Let me check, actually. Yeah, we're monetized. All right, guys. So market is down 390s, hit 388 yesterday. Amazon, Amazon is down a lot too. We might start to scale into some of these as well. Disney, Amazon is what we're going to start looking at. Yeah, we still haven't crashed yet. I mean, this ain't a crash. The SPY at 390s is not a crash, you know. And again, maybe we do, but we got a long way to go. We got to hit 348 essentially for a crash to be there. And yeah, so 50% is pretty high. That's what the market's baking into now. All right, guys. So, yeah, so the next 3 days is the big day. Where do we close today, guys? Will the CPI crash the market or this job report is the real question? Well, this report's important, but it's not going to crash the market, I don't think. CPI could, I mean, I don't think it's going to crash the market, but I think CPI could certainly negatively influence the market if it comes in hot. It just depends if that's what we're going to get. But yeah, it's a big thing. It's an important thing for sure. The CPI starts Tuesday, 8:30. On Tuesday, we're going to stream the CPI report, and it's a big data release for sure. Sorry, my eyes are all itchy. Somebody's saying a real estate crash. Honestly, I won't mind if there's a real estate crash. Like I was saying yesterday, I'll probably scoop up and buy some stuff if we do. But luckily, as you guys saw, I got pretty flat ahead of this report. Bitcoin under 20K, I saw. Yeah, Bitcoin dumping down here. Mm. All right, guys. So yeah, Tesla down to 173. So you guys buying the dip there? I'm really thinking about Disney here too. Uh, yeah, SIVB. I hear about SIVB failing, right? Look at this dump, man. SIVB down from freaking 270 all the way to $55. That's a big drop. Thought no live today? Oh, bro, we're live every day, man. All right, team. So yes, SIVB with a huge drop. Looking up the news here for SIVB here. It's getting pretty rough here. Also, JP Morgan sees jet fuels contributing to 60% to global oil demand growth for 2.2 million BPD, with China accounting for 300,000 of that. With SIVB, I did see some news on Twitter. They're down. Fears of a potential run on the bank continue. MW Truist downgraded them to a hold from a buy, and they slashed the price target to $100 from $174. And yeah, I think the risk here, I think the fears now, I think the fears here are that the rate hikes are going to continue. And again, I kind of agree with that. I think there's a chance, like 50 basis points, I think is pretty likely down. Now, I think most people agree. I think most people agree that that 50 basis points is a probable rate hike now, in my opinion, right? So apparently AMC is out with their perfectly popped popcorn. Honestly, bro, like genuine question. Who actually thinks that popcorn sales are going to save AMC? Serious question. Genuine question. Who actually believes that? Because I think that's silly, man. You think about the margins on popcorn. You think popcorn sales are actually going to help AMC survive? Again, I don't think they are. I don't think the sales are going to account for much. I'm not against AMC. I'm in AMC right now. I want AMC to go up. I just disagree with how my guy Aaron has been running things. And I think it's silly to basically insinuate that popcorn sales are going to save AMC. It's freaking popcorn, bro. The margins have got to be terrible. You know. I said the biggest winners of 23 so far are Tesla, Meta, Nvidia, Align, Carnival, and SVB Financial. He said Silicon Valley was a buy months ago. The Kramer curse happening again with SIVB. Man, it doesn't stop. It doesn't stop here, man. Today's a big day, though. We got unemployment and non-farm payroll data. It's a big day. So, yeah. Silicon Valley Bank is in trouble. USAG is suing KuCoin. The White House wants a 30% tax on mining electricity. A lot of other stuff posted by CZ. All right, guys. So, yeah, SPY all the way down to 391. Are you buying the dip here? SPY just popped back up, though. We're at 391s here. Do you think there's too much greed out there, or do you think there's too much fear out there is another question. Do you think the fear is too high right now? Do you think there's a chance we bounce today? Is Bitcoin really at 18K? No, Bitcoin's at about 19, almost 20K. Okay. Yeah. Yeah, people who had puts are up huge amounts there, dude. Huge amounts. All right, guys. So yeah, market's bouncing back here. Honestly, I was thinking about buying some Disney up, but I guess patience is going to be the name of the game today. I'm just waiting to potentially buy some stuff up right now, but those went from $1 each contract to probably 8,500 a contract will be open this morning. Yeah, that's huge. That's the risk of selling put options. Yeah, that's the risk of put options, man. You know, people don't understand, like, there's an unlimited risk when you take put options. All right, guys, market's rebounding. SPY up to 391.40s here. Tesla at 174. So market's bouncing back pretty quickly right now. I'm kind of bummed because I can't really buy anything until 18 minutes from now at 7 a.m. on the dot. All right, so yeah, today the yeah, big market bounce back though, but yeah, SIVB in trouble here. All right, so yeah, non-farm payrolls and unemployment drop at 8:30. All right, yeah. Unemployment date, non-farm payroll data. Should be fun, man. I mean, this is honestly a big day release. All right, team. So yeah, it's a big release here, man. A big release. Y'all do me a favor, hit the like button. Tuesday, obviously, of next week is going to be a little bit larger, but that's okay. This is going to be a big release too, to be honest. All right. Yeah, this will be a fun day here. So again, let me know what you guys think. We're doing a poll on Twitter here, and give your boy a follow on Twitter. And we got 3 options on Twitter: positive, negative, or neutral here. We're also gonna make this poll about 6 hours long. So we got the poll going live as we speak here. So SPY at 391.30's right over that, or right under that previous closing price, literally right underneath it here. Hey, what's up, Sim? Yeah, for sure. I mean, Sean, I think it could potentially get lower than that, dude. I really don't know though. We also have Canadian unemployment. The Canadians are expecting, I think, 5.2%. Yeah, for sure. You can thank the bank crash for the Dixie drop. Well, no. I mean, look, the bank crash mostly happened yesterday. So you can see the bank crash mostly happened yesterday during market hours. It dropped freaking 80 or 90% yesterday. And it dropped some more in pre-market today, of course. But the bigger drops in pre-market actually happened yesterday after the closing bell. And so with that, the dollar index is falling down right now because the market's moving up and there's an inverse correlation there. The dollar index, you can kind of see the dollar index go back and forth, but it's kind of flat, to be honest. So we'll see what happens with the Dixie here. Here's Tesla. Tesla all the way down at 174s here, and I am getting ready to trade. Hi, John. If unemployment data comes out higher than anticipated, isn't it bullish? Because, yeah, that's probably going to cause a positive reaction, but I'm not 100% sure, though. CPI could make everything get a lot worse, you know. But yeah, we don't know for sure the market reaction, but a higher unemployment number will probably cause a positive response in markets. Probably. We don't know for sure, but probably. Also, guys, vote on the Twitter poll here and give me a follow on Twitter, guys. We cover all this stuff on Twitter. We drop a lot of good stuff. Here is the Twitter link right there. So if you have not given me a follow on Twitter, I appreciate it. We do lots of giveaways on Twitter too. We gave an Xbox away recently. Xbox Series X. We gave that away recently. So give your boy a follow. Help us grow. Trying to push towards 3,000 Twitter followers. And yeah, I appreciate the support. Vote on that poll, though. It's right there. And what's up, boss? Yeah, no, I mean, the market might drop, but the market's actually almost green on the day right now, Tug. And so it's all going to be relative to the non-farm and unemployment data. So the non-farm and unemployment data are going to be much more significant than anything else today. And then CPI next week is going to be the biggest one by far, you know. So that's what's going to matter the most. Yesterday, the reason the market tanked here, guys, if you look at when the market dropped, the market mostly dropped at the same time of the SVB financial bank collapse. So you can kind of see a very similar price action here from SVB and the SPY. And so the market got weighed down by the bank collapse, which dropped freaking huge percentages, you know, like it dropped big. Gabriel, you actually have that wrong, bro. So higher unemployment, so less people working is going to be interpreted as a positive. If you look at jobless claims yesterday, for instance, jobless claims came in lower than expected, I believe. What did jobless claims come in at yesterday? I think they came in lower than expected. I'm not 100% sure. Let me check. I can look real quick. So yeah, jobless claims numbers came in yesterday higher than expected. And initially, the market reacted positively to this. So if you look at when the data actually came out here, the jobless claims report came out right here. So you can kind of see at 8:30, it kind of sparked this uptrend. And the market stayed up, or at least sideways, all the way through the opening bell after jobless claims came in higher. And so it's actually the opposite because the market fears inflation. So because the market is fearing inflation, anything that causes more spending is going to be seen as a negative. And I'm not saying I agree with it, but that's how the market has reacted recently, at least, is that anything that means more spending is bad. And right now, inflation is out there. So anything that causes more spending is going to be interpreted negatively in stock market terms. And so a higher than expected jobless claims number report yesterday caused a positive response in markets. Now, the bank collapse on the right eventually corrected the market back down. But again, just looking at the initial response here, you can kind of see higher, less people working is interpreted as a positive right now in markets because of inflation fears, especially after they said they might do a rate hike higher than expected during the Jerome Powell meetings and interviews for the congressional testimony and the House testimony earlier in this week. So right now, I think a higher unemployment rate is going to cause a positive response. Market went green for a split second. Yeah, 100%. And again, I'm pretty flat on my swings. I might start taking some small positions in like Disney or Google today when I can trade, maybe. Um, but yeah. Let's get ready here. But yeah, market's starting to pop up a little bit. We got about 6 minutes before I can actually trade a little bit, and I'll probably add some to Disney here down where we are now. Yeah, bank is also interesting. Jimmy said I would pay attention to the bank fear that was triggered yesterday. Even if it's slightly confirmed, it can change how the data is going to be read. 100%. And it'll be an interesting thing, man. Again, we got some extension on the downside now for me to capitalize on. Disney down at 96, Google back down at 92s, Apple at 150, Microsoft, they're still not cheap enough. I'll probably start buying a little bit of Disney here, just like a small share size of like 25 shares. And then if we get some larger pullbacks, I'll just kind of slowly scale into some more positions there as well. But again, we'll see. All right, so New York just said that ETH was a security in the KuCoin lawsuit. All right, so Kramer said a couple months ago, quote, "Stocks still fine," regarding SIVB. He said SIVB is still fine. I think fears are not justified, and it's a very compelling situation, end quote. He said that February 8th. So about a month ago, Kramer said that, and the Kramer curse continues. So yeah, now down from 280 down to 58 bucks. So yeah, traders spent $7,500 on SIVB March 200 put options for 25 cents a contract. They spent $7,500 on the position. It's down 60% today, and that position is now worth $2.1 million. 2.1 million. So It's a huge position, man. Scammers. You know, these guys almost start to smart money starts buying. I don't know yet. Again, I would say CPI, post CPI, and PPI. So PPI is next week as well. So CPI is Tuesday. PPI is gonna be all right. So PPI should be sometime after that. So Monday, nothing. Tuesday, the biggest day of the month. Expectations for CPI are only at 0.4%. Wow, really? This also says that CPI drops at 7:30. Is that right? That can't be right. But yeah, they're saying I'll have to recheck this data. It might be a little bit too early. And then PPI drops. Yeah, so it's gonna be at 8:30. So yeah, PPI drops Wednesday. CPI Tuesday. PPI Wednesday. Thursday, Philly Fed Manufacturing Index and jobless claims numbers, as well as the ECB interest rate decision, building permits, housing starts. Yeah. And then jobless claims. And then Friday, we got nothing, basically. But every day next week is going to be huge, except for Friday. So interesting for sure. And yeah, we still are not able to... I think anything that means more spending is going to be interpreted as bad right now. And so anything that causes more spending is negative currently. And so higher unemployment could arguably mean less spending, and that could make the market go up. Yeah, it's always going to be at 8:30. I think the source I'm using is wrong. But yeah, so CPI Tuesday, PPI Wednesday. And then that's basically the biggest stuff going on. So it's like if we've got some deep extension from those two, I might buy stuff up, but it depends. Curious to see what the market does today on this data here. Looking at our YouTube poll here, we do have a YouTube poll. We asked people, are you bullish or bearish on today's data? 39% are bullish, 61% are bearish. So mostly bears in chat. All right, so yeah, the Founders Fund advised people in SIVB to withdraw from it. A lot of people started getting nervous. At this point in time, Tim Sykes is just kind of like a photographer. He's just kind of going around and taking pictures. He's not actually making money trading, in my opinion. He's just trying to promote the whole trader lifestyle. He's like, oh, I don't trade anymore. I don't need to trade. It's like, no, you don't need to trade because you're making money selling courses, bro. Let's be real here. We in a good news, bad news today. Probably higher spending is going to mean negative market reaction. All right, guys, Tesla pulling back. I can buy some stuff up. I'm going to buy my little shares of Disney that I talked about here. Again, 25 shares. We're in 95.95 is our entry. Not a bad fill there, to be honest. 95.95 is our entry on Disney. Anything else that you think we could scoop up right now? Netflix at 290s. Meta at 180s. Ford, where's Ford back at? Ford is back at 1240, so we got a nice pullback on Ford. Anything else that's like reasonable enough of a pullback? I think this hat is too small for me. All right, guys. So, yeah, I mean, again, you might be short bias, and that's fine. You have to understand how I trade, though, as a whole here. So I'm going to take 25 shares. It's very small. 25 shares is a very small position for me. My account's got, over 100,000 in buying power to trade with. So it's like 25 shares of Disney is very small. And again, the plan is to let all this stuff happen over the next couple of days. I got 25 shares in case we bounce back today. If we don't, I'll probably start adding to it up until past CPI day. Depending on how much we drop, though, and 25 shares is a small enough position to where even if it goes catastrophically against me, I'm still gonna be fine. Market is tanking. Yeah, I mean, the big thing to understand here is that the way I trade is simple. I look for big pullbacks. And again, I'm green on the year doing this. I do this this is what I do. I wait for large pullbacks, emotional dips, when everybody's yelling the sky is falling, and I usually buy up stuff. So yeah, I'm going to dollar cost average into this over the next couple weeks, probably until after CPI. And it depends on what happens, to be honest. It really depends on what happens, but that's the plan. But again, it's small enough to where it's not going to hurt me too much if it goes against me. Google at 93 seems cheap. What's the PE ratio of Google, though? $18.2 PE ratio for Google. I might buy a little bit of Google, too. It's pretty low. All right. And that's going to be it for our trades today so far. Tesla dipping down. SPY still almost break even on the day. The drops came yesterday. SIVB. The question is, is there an argument for a dip buy here for SIVB? I don't know. I think there's risks, to be honest, in that regard. I think there's risks. We have any earnings coming out soon? I don't think so. I don't think we have anything really big. Buckle is this morning. No, next week is pretty slow. Tuesday, slow. Wednesday, Slow Thursday. I think earnings season is basically done, right? FedEx is Thursday next week. Friday, nothing. Monday. So I think the Monday. I know we got GameStop earnings in a couple weeks. Nike. Okay, so yeah, earnings on the 21st. We got Nike and GameStop in the evening. That's pretty big. Wednesday. Petco, Chewy, KB Homes. Nothing really there. Thursday, we got General Mills. Yeah, we don't really have any big earnings for a while now. You know, the next big one is GameStop on like the 21st. Walgreens is on the 28th. MU is on the 28th as well. Maybe we'll cover MU. We're definitely going to cover GameStop. I don't see anything else really big though. But yeah, the data drops. We got BB on the 30th. Still pretty small, man. Nothing really to talk about. So yeah, we bought a little bit of Disney, a little bit of Google, just in case we get a little pop back. So Burry tweeted and said, quote, "It is possible today we have found our Enron." And then he deleted the tweet. Why delete it? You know, I mean, I guess he could be considered market manipulation if it's probably why he deleted it. All right, guys, busy day this week to where my eyes are starting to hurt. So Oracle had earnings yesterday too, huh? But yeah, markets started to bounce back a little bit. Look at the SPY bounce back, almost going green on the day. Tesla up to 173.30s here. I don't know, Sonny. I don't know what you should do. Again, people act like I'm a perma bull, and I'm really not. Like, if I was a perma bull, I'd be holding stuff right now. You know, like, people just say every day that the market's going to crash here, and so I criticize saying it every day. And I always tell people, like, I genuinely don't know if the market crashes or not. I really don't know. I hope not, but it certainly could. I don't know. And I've been saying the same thing for months and months and months now. I don't think telling everybody the market's going to crash every day is necessarily good. But I don't think telling people the market is only going to go up every day either is good. I'm pretty in the middle. If you guys actually know me, I'm pretty in the middle. You know, like, I want the market to go up. I think the market long term obviously is going to go up. But short term, you don't really know what's going to happen. And what I mean short term is like neutrally, I mean over the next year or two, we don't really know what's going to happen. But long term, the markets are generally going to go up. And so investing is the biggest edge you'll ever have in blue chips, that is, you know. All right, so Bill Ackman posting here. He said the failure is the failure of SVB could destroy an important long-term driver of the economy as VC-backed companies rely on them for loans and holding their operational cash. If private capital can't provide a solution, a highly dilutive government-preferred bailout should be considered. The risk of failure and deposit losses here is that the next least well-capitalized bank faces a run and fails as the dominoes continues to fall. That is why government intervention should be considered, according to Bill Ackman here. And let me know what you guys think. This is definitely starting to turn me a little bit more bearish short term, of course. So we'll see what happens. I'm certainly not going to be taking any big size positions today, just based off of fear of bank runs going on the next less funded company, or the next most vulnerable company. I think there's risks, you know. Yeah, I see some people arguing about rate hikes on Twitter. How many rate hikes do you think we actually get? Yeah, a lot of stuff dropped yesterday. If anybody saw the market dump yesterday, that's kind of crazy. We go to 6.5 to 7. We go to 6.5 to 7. Yeah, he already said rate hikes probably would go on for the rest of the year for sure. Not for sure. I mean, he said most likely. So we have the data comes out at 8:30, so it is 7:15 right now. So we got about an hour and 15 minutes. I'll put a timer up so you guys can see what we got going on. So yeah, we got about an hour and an hour and 13 minutes at this point in time. We got the timer on the top right, but yeah, about an hour and 13 minutes. Yeah, so it'll be fun. Yeah, CPI will tell us 25 or 50, 100%. I think so too. But this is a big day today, don't get me wrong. And then CPI next week's a large day too. Mm. All right, guys. So yeah, SPY is right around the previous closing price here. So we got some time. You got the timer at the top right. We got about an hour. And again, the expectational numbers, we'll put that stuff on screen so you guys can see it too. Next week's a larger week by far, but this is a big Friday, man. Today's a big Friday, bro. We got unemployment for both the US and Canada, non-farm payroll data. So all right, so unemployment data is expected to show at 3.4%, higher than expected. Reading could cause markets to go up and vice versa. Non-farm data is expected to show at 205,000. Data drops here at 8:30. Help us hit 103,000 today, because I think we could get enough people here today. Hey, my guy, man, thank you so much, dude. Another huge donation. Thank you, brother. I appreciate that, man. That's great, dude. Thank you so much, man. I really do appreciate it. Thank you. My guy coming in here every day with these big donations, bro. How important is this non-farm news? Can you show the previous month's impact on the news to the market? Hello, John. What's up, bro? It's relatively big, okay? Generally, non-farm data comes out with unemployment, right? So the pair is big. So unemployment and non-farm payroll data is big data. It's important data to watch. It's relevant data to the markets for sure. And it's something that the market definitely reacts to. If we look back at the last report, let me see when the last release was. Hold on, I could find it pretty easily. Hold on one second. Let me find the last time we covered this data, because yeah, we can find it pretty easily. So the last one was dropped on February 3rd was the last drop here. So if we look at the SPY, the 90-day chart up, we look for February 3rd, which is right here. Or no, that's the 7th. Let's keep going back. That's the 2nd. It's gonna be right here. All right, so here was the last time the data came out. This is a 15-minute chart. And so over a 15-minute period, the SPY dipped all the way from 414s down to almost 411. Within 45 minutes, the market had dipped pretty big percentages, you know. And so again, this is a pretty big drop. It might not seem that way, but like if we put up a big 1-minute chart, let me see if I can put a 30-day chart up here, or like well, let me do that. Okay, we'll do a 5-minute time frame like this. This is gonna be a little bit easier to see. But yeah, February 3rd. So the reaction to both of this data is pretty large. You know, it's not small. I'll put it that way. It's not small. And yeah, so here is the reaction right here. So this is a 5-minute chart. So the data dropped right here, and we had a pretty big reaction. Again, down from about 414s, 415 or so, all the way down to, you know, 411. So we dropped about $4 a share on the SPY within 5, 10, 15, 20 minutes or so. So it's a pretty big reaction to unemployment data. And again, so it's a big release. We get a lot of people tune into this. A lot of people are watching unemployment data come out. And so it's very relevant data for sure. How much is it going to move markets? Again, I really don't know. But it's a very relevant release for sure, you know. Also, guys, y'all do me a favor. And again, thank you so much for that donation, brother. That's amazing, man. Thank you so much, dude. Yeah, he's hit me with some pretty big donations daily, man. So again, thank you so much, bro. I appreciate it. Also, guys, give me a follow on Twitter if you haven't already. Here's my Twitter poll. Vote on the Twitter poll if you have not already, guys. I certainly appreciate it. Again, if you want these streams posted to you, hit that subscribe button, hit the notification bell, follow me. It's @BeginnerTrades is my Twitter handle, @BeginnerTrades. I am trying to grow my Twitter page now. So if you can, give your boy a follow on Twitter. We appreciate the love and support. Hopefully we can keep the growth up. And again, we'll cover the data. Again, thousands of people tune into these streams because we cover the data very, very, very fast. So again, help support us. Hit that sub button, hit the notification bell. Let me know if you're buying anything right now, guys. But yeah, so here's the Twitter page. Again, give your boy a follow. There's the link right there. It's completely free to do. Give your boy a follow on Twitter at Beginner Trades, BEGINNER TRADES, Beginner Trades. All right, so Goldman Sachs ex-banker got 10 years in jail for $4 billion fraud scandal. All right, so Jim Cramer posting this morning, he said, how rare to have a truly momentous day ahead of us. A SI run, a solid bear raid, a possible topping of the rate cycle, and a flight to qualify all once before an unemployment number that's the biggest in ages. Play ball. Yeah, it's a huge day today, guys. Ridiculous day ahead. And honestly, the next 3 days is big. I'm not going to give up my sources, but hey, thank you, my guy Maximus. Thank you, bro. I don't see the notification though, but hey, thank you so much for anybody that followed me. Vote on the poll as well, guys, if you haven't yet. All right, right now on Twitter, we got about 58.3% saying negative, 41% saying positive, or 42% saying positive. No neutral views here. I'll cry about it, T. You know? The Fed actually hasn't done anything. Yeah, well, yeah, the next rate hike decision is on the 22nd. It's on the 22nd. Powell mentioned the need for higher unemployment data in order for economic cooling. Yeah, that's what I'm saying. A higher than expected number, as I say on the screen right here. So if you look at the screen right there, a higher reading will probably mean positive market reactions, I think, right? So a higher unemployment report is probably going to cause positive response in markets, is my guess. Oh, there it goes. It just updated me. Yeah, thank you for the follows, guys. Like I said, I'm trying to hit, I'm trying to hit 3,000 Twitter followers. All right, guys. So market is SIVB is starting to move some more here. Let's put a 5-minute chart up here. Wait, I think I got rid of my 1-minute chart accidentally here. Let me fix this. There we go. Yeah, I'm gonna put a 30-day chart up. Put a 1-minute chart up. There we go. All right, SIVB still testing lows down here, starting to pull back now. All right, so General Motors will offer voluntary buyouts to a majority of its employees, according to a letter sent to workers Thursday. So GM expects to take a pre-tax charge of up to $1.5 billion related to the buyouts, according to a public filing. And thank you for the follow, Sergio. Charles. Like I said, we're going to be doing a giveaway pretty soon here. Hey, my guy T, do you think Bitcoin hits 25K in April? I don't know. I hope so. Hey, thank you, Wolf. I appreciate you, brother. Thank you so much, man. But no, thank you, T. I appreciate it. Even though you disagree with not slide the source. Hey, I'm the source, bro. Listen, I'll tell you this, T. Thousands of people tune into my streams because I cover the data very, very, very quickly. I cover the data very, very quickly. Generally, we get the data out within seconds. You know, sometimes, most of the time, it's less than that, actually. But generally, we get the data out very, very quickly. We get the data basically as soon as it's released, and we spit it out very fast. And so we are the source here, sir. You can pay $30,000 for Bloomberg a year, or you can watch beginner trading for free. And that's why thousands of people tune into this stream. And you better believe when these numbers drop, we will have certainly at least over 1,000 people here watching that. Hey, MS, my guy. Hey, bro, I'm still holding my 50 Bitcoin short, doing really good, looking at the chart and trend. I think the downside will continue. Hey, good luck, man. Congrats, brother. That's amazing, man. I thought you might make some money on that trade. But congrats, dude. That's awesome. But no, regardless of that, T, I appreciate the support, bro. Do you think Bitcoin to 25K in April? I really don't know, man. I really don't know. Man, all the donations just coming in quick, guys. Thank you so much. I appreciate it. Do you think AMC will rise and run before the March 14th vote? No. No, I do not. I'm sorry. Listen, don't hate me. I'm holding AMC. I want it to go up. But again, to be completely honest, and I'm not trying to spread FUD. This is just my own subjective opinion here. All right. But to be completely honest, I don't trust AMC because I don't trust Adam Aaron. I think Adam Aaron has contradicted himself so much lately that, like, I just don't trust. I don't trust him. You know, he says basically, Adam Aaron goes, the ape divvy is going to be the greatest thing ever. It's going to save AMC. It's going to be the best thing ever for AMC. The ape divvy is great. And then, like, months later, Adam Aaron saying, oh, getting rid of the ape divvy is going to be the best thing ever for AMC. It's going to be the best thing ever. He says, oh, we're going to save our business by selling popcorn. Genius. What a genius idea, selling popcorn. The high margin, lucrative business of selling popcorn. Wow. Amazing plan, Adam Aaron. Amazing plan. I just think, listen. What AMC needs to do is they need to make their theaters cooler is what they need to do. Stop selling freaking popcorn. The margins have got to be terrible. Like, what AMC needs to do is make their theaters cooler. Figure out a way to innovate in that regard by making your theaters cool. I don't care if you do some special type of 3D. I don't care if you build some new special theater. You need to innovate with regards to theaters. You need to get more butts in those seats. If you want to succeed, if you're AMC, you are a movie theater business, you know. And so chasing, you know, waterfalls with popcorn sales and, you know, just trying to basically pander to the short squeeze community in AMC is like going to cause them to fail long term, in my opinion. I think they need to stop that. They need to start focusing on just building their business, making their business stronger in that regard. And I just disagree with a lot of the moves they're making. And I'm holding it. I hope it goes up, but, you know, I'm not confident. I think they need to figure out ways to bring more people in the seats. And I don't think selling some, popcorn is going to save them. I think they need to do something. They need to innovate with regards to their theaters. It doesn't need to be 3D. That's just an example. They need to innovate. They need to be different than the competitors. They need to make people say, hey, when I'm going to a theater, I need to go to an AMC theater. And they need to make people want to go to their theaters more. They need to do deals with movie stars to bring people there. They need to do a lot of stuff, Like they need to have special foods that they sell at theaters, only at theaters, that make people want to go. You know what I mean? They need to do, you know what I mean? Like they just need to do more stuff like that. And I don't know if they're necessarily doing it. You are the best FX streamer so far. Hey, thank you, Isadora. I appreciate that. I mean, I never trade Forex, but I appreciate being the greatest Forex trader of all time. I do. Thank you so much, man. Definitely top. Or thank you so much. I really do appreciate it. Thank you. Yeah, SVB testing lows again here. Testing lows. Are you buying up stuff right now? That's the question. Well, they already serve beer, I'm pretty sure. But yeah, thank you guys so much for the donations, man. Thank you so much, Secret. Thank you, MS. Congrats on that short. They need to basically make it like Disney World, okay? They need to make AMC theaters like Disney World. All right, guys. So Tesla just broke under the previous closing price. It's basically been consolidating around that red to green level for, an hour at this point in time. Market pulling back a little bit down to 390.8 here, 390.8. This is probably where I start to buy stuff. But again, I'm not going to take any huge size because I understand the risks over the next couple of days, specifically up until Wednesday of next week. We still got data dropping after Wednesday, but I think up until Wednesday is when the larger risks are there, specifically CPI and PPI reports coming out. Thank you, Wolf. My guy, thank you, man. I appreciate you guys. Thank you so much. Yeah, that's cool, Sean. I think I need to do more stuff like that. Yeah. But yeah, so market is pulling back a little bit at the volume weighted average price. We've been on a little obvious uptrend here for a minute, though. Like you can kind of see the trend that's been here. Oh, that's a terrible drawing. Hold on, let me fix this here. So you can kind of see the trend that we've been in for, a couple minutes now on the SPY chart. Yeah, 3.4% is what they're expecting for unemployment rates. And again, we'll see if it's good. All right, so there's the dip. Um, yeah, so let's see if we hold that trend. We got the trend drawn on the SPY. Let's see if we hold. Bro, anybody holding SIVB and SI over the last couple weeks is crying right now, man. Anybody actually holding those two over the last couple weeks, they're crying. I'd be too, to be honest, probably. You know, next Friday the movie with Craig. You know, honestly, I like next Friday better than Friday, but Friday I don't. Um, Friday is the OG good one, but next Friday I like that one too. It got a lot of hate, but I actually like next Friday. And then the Friday after next had Cat Williams in it, so I like that one too. They need to do another one. But yeah, we're at 58.40s for SIVB. Tesla all the way down to 172.20s. How is the unemployment data today different from what was released yesterday? So yesterday was jobless claims. It's the amount of people claiming they don't have a job. Today's unemployment and non-farm payroll data. Yeah, I understand most people are not going to understand the movie references because y'all just are not cool like that. But anybody that grew up in the 90s should know that movie, you know, early 2000s. I Know What You Did Last Friday. Those are good movies too. My wife and I watched those pretty recently. So yeah, market pulling back again. We're still in this trend. Maybe I should have left this trend here, because here's the trend, and I think this is the clear trend that we've been in for a minute now. And again, let's see if we actually hold. Again, we took some small positions, but they're very, very, very small, just because I don't trust it. I just don't trust it right now. And so again, we'll see if we get anything good, but. But there's the trend. We'll see if it follows that trend. Let me know if you guys think it will. We do have about 45 minutes before the data comes out, and the data is going to be big here, team. This is going to be very relevant, very important, very influential data. It's not going to be as big as Tuesday because, again, CPI is going to trump all of this stuff. And then the rate hike decision on the 22nd is going to be pretty big as well. So over the next 2 weeks, it's a pretty big week for economic activity. And let's keep the growth up here. What's up, Zahid? Yeah, dude, pollen is bad. Big worm, yeah. Getting rid of Chris Tucker was one of the worst decisions Friday ever made, man. He was what made the first one. Yeah. You get fired on your day off, you know. Nah, the Friday movies are good, man. You gotta relate to them at least a little bit, you know. And I think there's generational differences too. You know, I think there's differences between like my generation now and like, you know, especially between people born in like the 70s, I would say. But maybe some of them are cool. But like and I'm not, listen, I know some of you guys were born in the 70s, and it's all love here, really is. All I'm saying is that there's just generational differences there, you know. Half Baked, if we're talking about like old school comedies, Half Baked with Dave Chappelle is probably one of my favorite ones too. I probably watched that one more than Friday as a dumb teenager, but I loved it too. That was my first real exposure to Dave Chappelle, really, before the Chappelle Show came out. But no, Disney at 95's here. I don't know whether I want to add to this or not. Probably not. Again, I think the risk is too high there. No, they're 20s, but they're clean though. You know. Okay, they're 10s. They're 10s, but they're clean though. Yeah, Epps is pretty funny too. I mean, he replaced Tucker, and that's okay because Epps was hilarious. I actually liked Epps a little bit more, but Tucker was good too. You know, they're both good. Take the test high, get high scores. That's a good one too. I grew up on all those movies, guys. I'm sorry if they're kind of stoner comedies. They're good though. I'm not really big, you know, but those movies were always fun to watch, man. As a teenager, you know. All right, guys. So yeah, market is still in that trend. You can kind of see that my trend is terrible. I could probably draw a little bit better trend. I think what I have here actually has a better option. Let me see if it'll let me. Yeah, so I think it actually lets me draw this a little bit better. There we go. Yeah, that's going to be much better. So there's the trend that we're currently in right now. Get my eraser out. There we go. So there's the trend we are currently in right now. Yeah, the National Lampoon's movies. My family loves them right now. Yeah, I love the quotes. Yeah, man. What's up, Chris? I still don't get the difference. Yeah, I mean, there's a lot of ways. Yeah, for sure, Steven. Great movies, man. Yeah, Dude, Where's My Car is good too. I had Dude, Where's My Car. American Pie was good. It's just different, bro. They're just different. You know, American Pie movies were good, but like they were obviously less funny and cheesier. You know, a little bit. They were just different movies, bro. You know. Blue Streak, yeah, Blue Streak's good too with Martin Lawrence. But yeah, SIVB guys is testing the lows down here. It's at 56 right now. It's at 56, so it's testing the lows. And what I'm wondering is this going to negatively influence other tech and Bitcoin stocks? Bitcoin's starting to bounce back, almost back up to 20K. But look, the lows are getting tested right now for SIVB. It's testing lows. The lows are 55.4. Just broke the lows of the day for SIVB. SIVB just broke down under the lows of the day again. So, yeah, interesting breakdown here. And let's see how this influences everything else. But they are starting to break down again here. Just tapped lows. We'll see if it actually rebounds back up. But they did just break lows here, team. Hey, thank you, Ahmed. I appreciate it. Thank you. Yeah, my family and I, Aaron, recently watched the Ace Ventura movies. They were still good, but they were funny. Yeah, Grandma's Boy's good too. All right, but yeah, 53.3 right now for SIVB. 53.3. Lows just broke here. Tesla always swings a lot. Yeah, they're still funny, bro. They're still funny, man. Tesla 170s. Tesla's just swinging back and forth because the range of movement is big. But again, you can kind of see we drew this trend, and we're still in this trend. We're still following this trend right here. So watching these now, team. But yeah, you can kind of see we're still in these trends, still following them. Yeah, Superbad's funny too. I like that one too. I've seen that one so much though, man. All right, guys. So yeah, market's still following this trend. Tesla all the way down to 173, under 173 for a little bit, kind of popping back up between that previous closing price. The question, though, I think that the real question here is leading into this unemployment and non-farm data. Is the market extended on the downside? And so does that mean that we should put that nuance out there where we're extended on the downside now, and even if we get bad economical data with unemployment, uh, which would be lower unemployment, to be honest, because again, economical growth is going to be seen as a negative right now, right? So even if we get negative unemployment number, which is lower, or we get lower non-farm data, is the market extended on the downside now, and is there an argument for a rebound here? Again, of course, big shorts are going to be saying, no, market's going to keep crashing. I don't think it's that set in stone, though. I really don't know. But I think, we could be extended on the downside. We had a really big pullback here. But at the same time, though, this economical data is going to be much more profound of an influence over, extension. Again, I talked about this the other day, but technicals are trumped by fundamentals every time. Unless we just get some really, really big extension, technicals are going to okay, I'll put it this way. If a technical pattern and a fundamental pattern, like a big one at least, so like CPI, PPI, unemployment, stuff like that, if they all happen at the same time, the fundamental move is going to trump the technical move. It's going to be more profound. It's going to cancel out the technical move. Not completely, but the technical move is going to be much less relevant if a fundamental release happens at the same time. And again, I think that's a very obvious thing and a self-evident thing in the market here. So again, none of this really matters right now. What matters the most is at 8:30, which is in 40 minutes when these numbers come out. That's going to mean the most here. Now, I think extension could play some of a factor. So maybe we don't drop as much if the data comes in bad, or maybe we go up even more if the data comes in good. But I think that's an important thing to look for. And I think the question is, are we extended on the downside now? And again, every time you say this, people are going to say, no, of course not. But greedy when others are fearful when others are greedy. At the same time, I'm not brave enough to take any big long positions right now. I don't really know what we're going to get. No, I don't like that one, CT. I like the first one, probably. The first one's the better one. I don't know, man. I don't think SI has a chance anymore. I think SI is going to... Market dropped mostly Ruma from the bank collapse of SIVB, which actually just broke under 50 for a split second. You can see it got all the way down to 49.2 here, 49.2. So that's why everything broke down yesterday, is the bank collapse. Rip the Band-Aid off. Yeah, I think a lot of people think we should just kind of rip the Band-Aid off and do really aggressive rate hike decisions and then correct the inflation problem fast and then play cleanup. A lot of people believe that, but we'll see. Yeah, Super Mario movie coming out. We'll see how that impacts everything. But yeah, we're holding Google, we're holding Disney. We're pretty flat on these so far. We're gonna see if we get a bounce back today, but they're very small. So why mark it up if higher than 3.4%? Because spending is interpreted as negative right now. So anything that means more spending is going to be seen as a negative right now. And anything that means less spending is going to be seen as a positive. So higher by that logic. Again, I'm not saying I agree with it. That's just what we've had lately. Like what we've had recently is uh, a higher uh, unemployment rate. Like less people working has been interpreted as a positive recently because it means that less people are spending money, and that's going to be seen as positive. So again, more people spending is bad, and more people working means more spending, which is going to be interpreted as a negative for market activity. And that's essentially what we've got. It's like more spending is seen as a negative, and that's been causing drops in markets. So anything that causes more spending is going to be seen as bad recently. Yeah, we drew this little trend here too. All right, guys. SIVB still breaking down at 48.40s right now. 48.40s. The SPY just ripped up. Tesla actually just went technically green on the day for Tesla. It's at 172.90. The SPY still is in this trend range that we've drawn all morning here. And looking at our poll numbers here, we do have some poll numbers. We got about 1,000 votes. 60% are bearish today. 39% are bullish currently. Looking at our Twitter numbers, we did do a Twitter poll. All right, we got about 20 plus votes. 9.5% are neutral, 57% are negative, and 33% are positive. So pretty even with regards to what we did relative to what we got on YouTube. I mean, so pretty similar comparison between YouTube and Twitter votes on sentiment. But yeah, SIVB still breaking down here, still breaking down. But yeah, SIVB breaking lows again here, man. Look, 44.70s, 44.20s. 44.25 is the new low. 43.80s, guys. SIVB dump is continuing here, so put options are raking in money. Congrats to puts, I guess. Do you think market has factored in the bearish outcome of today's reports? No, not necessarily, Ivan. I think the market downward pressures for a few different reasons over the last couple of days. One, I think Jerome Powell basically said that we would probably do 50 basis points on the 22nd of this month. So basically, for the rate hike decision, I think he said we're going to do 20 or 50 basis. He said that we were probably going to have to raise rates more aggressively than initially anticipated. So that's a bad thing for sure. It just means more aggressive. rate hikes. So that's number one. That's the first reason the market's dropping over this week. Number two, SIVB is breaking lows here. And this is a bank that, to put this into perspective here, guys, looking at a 10-day chart is probably the best look here. Look at this drop. It dropped from 280, guys, 260s, 270s, from $270 to $40 in about 36 hours. That's a huge drop. And this was not a penny stock. This is a big company, a very big company. SIVB had a market cap of about 6.3 billion. So this is not a small company. This is not a small cap. And this thing basically dropped, huge percentages. This thing dropped like 80%. In a day or two. So that's a huge, bank loss. It's Silicon Valley Bank weighing on the entire banking sector. All the banking stocks are basically, going to be hurting from this. If you look at JP Morgan down big yesterday, if you look at Bank of America down big yesterday, the whole market was down, but the banks are really what's dragging the market down. And again, they're happening because of Silicon Valley Bank dropping 45%. And even more, again, it's down about 80%. It just hit 40s. So it's at 40.5s right now for SIVB. It is a huge dumpster fire at this point in time. And it's dragging everything. John, you trading Google or Amazon? I bought a little bit of Disney and a little bit of Google, but it was like 25 shares of each. Small positions, to be honest. We're flat on Disney and flat on Google right now, so we're not even down much. We just bought them recently today. And again, I'm not telling you to buy them. I have no idea what's going to happen. But remember, CPI drops on the 14th, which is inflation data, and that's going to be a big influence over markets. Yeah, Carlos, just to give you an update, man, I'm not sure if you were the same guy who updated me before on the post. Let me check that post. I know we had somebody that I kind of had to correct a little bit here. Hold on, let me make sure. Whoever it was changed it. But yeah, so again... Okay, let me think of the easiest way to put this. Okay, so Carlos, the fact that you're trying to correct me on the data shows that you don't necessarily understand what expectations mean. And please don't take offense to this. It's a good moment to kind of learn, hopefully. So expectations vary from source to source, right? They're not going to be all universally one number for expectations. That's not how it works. And so non-farm payroll data is looked at by a number of different banks, a number of different analysts, a number of different news outlets, and they are the ones putting out the expectationals. Not one. There's not one universal one. So again, it's going to vary from source to source, is the point. But I think most people are expecting 205,000 as well, and so I don't know, CNBC can say whatever. But again, most people are expecting around that, right? Also, I think you're looking at, I think you're just looking at old data here. Let me see. So I know non-farm payroll data dropped on Wednesday of this week. Let me see what that was. Yeah, so you're actually, no. Yeah, so they came in at 242 for non-farm employment data on Wednesday. So yeah, but yeah, today's expectation is 205 at most places I'm looking at. All right, guys, so still in the trend. Again, SIVB broke the lows again down to 39.50s here. 39.50s, huge dump for SIVB, huge drop here. We got less than 30 minutes now. Team, less than 30. Correct. more likely to rise. The more economic and GDP growth, the more likely they are to raise rates more aggressively. Is what it really is. Um, so yeah, the more economical and GDP growth, the more likely they are to raise rates aggressively. Is what it is. Yeah, SIVB down to 39.50s here again. 205 is what they're expecting. I'm pretty sure for non-farm data. Unemployment's expected to show up at 3.4%. We bought some stocks right now. We're not really trading the E-mini at this point. We're buying some stocks right now, but again, very small positions. I just don't trust them enough to really be super confident. You know, like we bought some stuff, but it's not. I don't trust it enough to really be like hella confident in anything right now. We're holding a little bit of Bitcoin. SIVB down to 36s here, man. I wonder. I can almost guarantee it's not going to let me short this in pre-market. Let's try it. You gonna let me short? Oh, it did. Oh my gosh, it did let me short. 25 shares short. Cover? Just covered 10 shares of that. We're gonna hold the 15 shares now. I'm just gonna hold this, to be honest, bro. How would it let me short this, bro? Shorts are still available on TD Ameritrade. Wow. Luckily, we took those 15 shares off, so we're flat on the day here. The only problem is that if a buyout comes in here, that's the risk of this trade. They did let me short it, which is kind of crazy. 24 minutes, guys. 24 minutes. Yeah. Yeah, he said they're not a penny stock. Maybe not currently. For a little while they might not be, but give it time. Well, I think the logic of the chase here is that I'm okay with losing whatever I invest into it. You know, it might pop up, but you know, again, I'm okay with losing $50 here, whatever it needs to necessarily be. It's just a small trade, and I might lose some here, and that's okay. Because again, the whole point is just taking a small risk on the trade. If it breaks 40, I guess I'll cut it. The only risk here is like if a buyout comes here, then I'm basically screwed, you know. Right at 40, but 40 is a big level, so again, we'll cut it if it breaks 40. But $50 risk, we can have some fun with it, you know. All right, retracing back down to 38s, 37s. All right, guys, we got 22 minutes here. 22 minutes. Got a little bit less than 1,000 people here, so hey, subscribe. Yeah, I don't mind shorting it and just sitting on it. We took profit pretty quick on the breakdown. But like with the bloodbath dumpster fire that this thing is in right now, like I don't mind sitting on this and trying to let it break fully down here because it could break down a lot. It could also rebound fast too. So, you know, again, we scaled out fast because of that risk. 205 is the forecast. All right, there's another flush back down under 37s. Again, we're pretty flat on this trade. Kind of risky trade, to be honest, for me, but all right, another breakdown under 37s, 36s, 35s. Flat on the trade again. Again, patience, I think, is what I have to be here in this trade. Patience. I think getting close to these lows is a very bad thing for it. I think there's going to be kind of like a magnet that drags it down. It's just a dumpster fire right now, man. But yeah, you can see the SPY actually still in this trend that we've been in here. You can see the trend pretty clearly. All right, again, we're flat on the trade. Obviously, this is a very weak looking technical chart as well, but please stop spamming Charlie. I get live news from a lot of different places, man. Like, I always wonder the people who join a stream and then just start saying the same thing over and over again. You know? All right, we're testing lows. See if we can crack it. We're pretty close. Yeah, newspaper. Yeah, honestly, I'm just surprised they're even letting me short this right now. All right, it's starting to crack down towards the lows here, right around 35. All right, guys, we got 20 minutes. 20 minutes. All right, crack those lows. Do it. Break lows. I know it's kind of dragging the whole bank sector down, but some of them aren't up early. Some of them are actually all right, guys, we got 18 minutes again. Non-farm payroll data expected to show up at 205. Non-farm payroll data at 205. Unemployment rate expected to show up at 3.4%. 3.4%. Again, I think higher is going to be worse on everything. Or I think higher is going to be worse on non-farm. Lower is going to be worse on unemployment data. So I think if we come in lower than expected for unemployment, I think the market's actually going to react negatively. And I think if we come in higher than expected for unemployment, the market's actually going to react positively to it. At least I'm assuming. Again, I'm not 100% sure. All right, under 36. Which is more important out of those two data? Unemployment is more relevant, just because it's more watched. But support holding at 36. But let's see if we get a breakdown here. We're mostly just consolidating. Hey, thank you, Will. Yeah, well, it depends on what you think is good. Like, again, higher is going to be interpreted as worse for non-farm payroll data. So, like, economical growth is going to be bad. for market activity because inflation fears are so high. Economical growth, like higher non-farm payroll numbers, is going to be seen as a negative, and vice versa with unemployment. Like lower unemployment is going to be seen as a negative because it's going to signal economical growth, which is going to be seen as a bad thing for prices. And with high prices, economical growth is going to be seen worse. All right, I don't really like this here. It's taking too long. We're probably about to cut this. We move up anymore and we're going to cut this. It's consolidating between this candle, but yeah, we move up anymore, we're going to cut it. I just don't trust this. And I don't really want to get stuck in like a huge squeeze up here. We retract here, that's fine, but yeah, we're going to cut out of this pretty fast if it breaks the candle here. And again, I don't want anybody to copy me. No idea what's going to happen to any of this stuff. And this is probably a pretty risky position, in all honesty. Hey, thank you, Nicholas. I appreciate it, man. Thank you so much. All right, we got about 1,000 people here. So, hey, hit that subscribe button if you have not yet. Good question. Do y'all think SIVB bounces today? I don't know. Try to be patient with this, and it's such a small trade. It doesn't mean much, but there's a flush coming all the way back down. Again, we did buy a little bit of Disney, a little bit of Google today, just a little bit. Hey, what's up, Kieran? Make it a poll. Yeah, it's certainly risky. We got 15 shares though, so the risk is still fairly limited, but it's not the safest thing, I'll tell you that. All right, we're out. We cut it, and it might have been right at the wrong time, but we got out. And it looks like we got out just before the drop down, which is okay. Honestly, I just don't like the risk. I'm a pretty risk-adverse trader. And I think there's chances, like, there's a few things, like, the longer I stay in it, the less I like it. Because here's the reality of it. There's chances that this thing gets halted. Like, say somebody comes in with a buyout, or somebody comes in with funding, or the government bailout announcement comes in, right? This thing could justifiably rip up from 35 to 90. And so in that situation, I would be stuck if a halt came in, and I would be short. And so, making 30, 40 bucks or whatever it would be from this trade is not worth that risk, in my opinion. And so I didn't even know if they would actually fill that short trade. So it's all good. All right, guys, we have 14 minutes left. 14 minutes non-farm unemployment data dropping in 14 minutes. Market is pretty sideways right now. We're still in this trend that we've been in lately here. You can kind of see the trend there. Tesla consolidating. I was shorting SIVB. Could have held and made some money, but like, again, I think the risk in shorting that thing's a little bit too high. I think I could make some easy money shorting it, but easy is never risk-free, Is non-farm payroll higher? Yes, it's probably bearish. Yes, Bill, I agree with that. Above 205 and below 3.4 for unemployment will make the markets drop. Yes, I think that all signals worse inflation problems. Yeah, it's all good. Like I said, it's small trades for me. All right, team. So again, data comes out soon. Let's see what we get, man. Hopefully we get some good stuff coming out. But yeah, big day today for sure with data. Big important data release this morning. In 13 minutes, we got non-farm, we got unemployment for the U.S. and Canada dropping. U.S. unemployment is expected to show at 3.4%. Again, lower than 3.4% will probably signal market drops. We don't know for sure, but it'll probably signal weakness in markets if it's under 3.4%. Higher than 3.4% will do the opposite. It'll probably equal a positive response in markets, and vice versa. It's the opposite for non-farm data. So non-farm data comes in higher, it's going to be seen as worse for markets. That's essentially what it has right now. So regarding whether it's priced in or not, it's I think what's more so priced in is Jerome Powell's comments regarding rate hike potential decisions for the 22nd of March. I think after Jerome Powell spoke this past week, he basically said that we might have to raise rates more aggressively than anticipated because of worse inflationary data. Like over the last 30 days, we had CPI and PPI come out. This has been very bad for markets. Not terrible, but it has, like, Jerome Powell said during his last meeting that if inflation stuff came out worse, they might have to be more aggressive. And so over the last 30 days, CPI, PPI has been worse than expected. And so in that regard, the Fed might have to be more aggressive in their rate hikes. So I think right now 50 is what's expected. And I think before this past week, 25 was what was expected here. So that's basically what we have going on for it. Yeah, Manuel, if it's blurry, it's on your end, brother, not mine. All right, we got about 1,200 people here. We are going to throw it in sub-only mode here, team. If you haven't already, hit that subscribe button. We are going to throw it in sub-only mode. Listen, everything we do here is free. We don't charge for content. We don't sell courses. We don't sell services. We don't claim to be experts. We don't act like gurus. Everything we put out there is completely free. We don't charge a penny for it. We have sponsors and stuff, but we don't have any paywalls behind content. Everything we do here is free. Thousands of people tune in for these streams because everything we drop is free. So if you haven't already, hit the sub button, hit the notification bell. We appreciate you guys. How many times does the Fed have to be wrong about things until you lose confidence and buy gold? Define wrong, Like, again, I see bears just be really emotional, you know what I mean? And like most of the time it's just emotions talking. Okay. We can be short the market, and that's fine. You can make money on the short side, but nobody knows what's going to happen, including the Fed. People have been basically saying a crash was imminent over the last 6 months, and the market has mostly gone up over the last 6 months. If you look at the trend here, and maybe we crash. I'm not saying we don't crash, but like market's mostly gone up, since October. Beginning of October. Now, we're at 390s now, but I mean, here is the last 6 months. The last 6 months is still very green here. You can kind of see that's the last 6 months. And again, this certainly doesn't mean a crash. What could cause a crash is what a crash would look like is that. And right now we have done this basically. So again, I think we could crash. I'm not saying we don't. But like shaming people that don't buy crash, I just don't think it's the right move. I think you got to look at things objectively, understand that nobody really knows what's going to happen, and most of the people out there calling other people names and shaming them are just put option traders or short traders that want the market to go down. Isn't a crash necessary? No, not really. A lot of people are going to say, oh, well, we have to have a crash because, the market needs to be rebalanced. Economic push down is what the Fed rate hikes are supposed to do. They're supposed to push down the markets. So the whole point of raising rates aggressively is to discourage spending. So that means lesser GDP and economical growth. But the markets aren't necessarily correlated with that exactly. So like the markets are going to more so look at sentiment overall. And really, right now, lesser economical growth actually equals a positive in markets. So lesser economical growth has caused a positive response in the stock market. Like GDP data coming in lower is better right now. And same thing for today. Most likely today, if we get lower unemployment, it's going to be worse for the market. We get higher unemployment, the market's probably going to go up. And payroll numbers is going to be the opposite. We get higher payroll numbers, the market's probably going to drop. We get lower payroll numbers, the market's probably going to go up. And sure, inflation is still certainly bad, but it has gotten better over the last year. And so acting like inflation is the worst it's been ever is not necessarily true. At the same time, last year, inflation was worse. So I think you got to look at all of the different nuances of it. And again, I'm not saying we don't crash. I'm not saying we don't drop, but it's definitely not a certainty. We could drop, but we also could bounce back. And I think looking at that, understanding the balance there is important. We got 6 minutes, guys, 6 minutes. Yeah, it's 3.4% is what I'm showing, but it varies from sources. All right, 5 minutes, guys, before the data comes out. 5 minutes. Well, people are asking me the same questions every day, so sometimes I got to repeat myself. I think that's pretty normal. All right, Kramer, optimistic in SIVB. I don't know if there's a worse sign in markets right now. Kramer saying if SIVB can rally at all to the 60s, it can do a deal in the 50s, and there is hope. Uh-oh. Oh, no. It's a bad sign. Kramer optimistic about SIVB. No, that's wrong, Payne. Yeah, well, non-farm data as well as unemployment data are all very relevant because of Powell's words this past week. Payroll data, again, more is worse, lesser is better. All right, guys, 4 minutes. And again, I'm talking about market reaction. Higher payroll data is going to be seen as worse. Lower data is going to be seen as better, most likely. Higher unemployment data is going to be seen as better. Lower unemployment data is going to be seen as worse, most likely. All right, guys. Bitcoin tanking down over the last couple of days. Let's look at the SPY. We're going to zoom in here. So here's the SPY right now at 390. We'll put the dollar index up here as well. We got SIVB. We'll watch how that reacts, but I'm going to put the Dixie up here. Dollar index is just more relevant to market activity. So there's the dollar index. Yeah, I'm just talking about market reactions, guys. people that are disagreeing with me, again, I'm talking about market reactions, team. Meet Kevin's good. I like Meet Kevin, but again, I'm talking about market responses. I'm talking about inflation fears in the market. And again, it's certainly, again, I've been watching jobless claims. I've been watching all that stuff drop. We cover all the economic data that drops every day. And again, economical growth is still seen as a negative with inflation, at least lately. That could always change. And again, maybe it changes today. But with what's been going on, economic fears are causing, or inflation fears are causing people to get bearish if economical growth happens right now, and bullish if we have less. Like jobless claims caused a positive reaction because they were lower than expected, or they were higher than expected. I mean, they came in at like 210, expectations was 195, and the market ripped up as soon as they came out. So for the same reason that we're talking about today. And again, maybe it changes today. It does vary. But I'm talking about short-term market reaction. All right, guys, a minute left, team. Why did it crash afterwards? It crashed afterwards because SVB or SIVB Bank essentially failed. Dropped 80%, dragging the banking sector down, which in turn dragged the rest of the market down. That's very obvious. Look at Twitter. Everybody's talking about it. SIVB is a dumpster fire, and it basically tanked the market yesterday. All right, guys, here's the data. 40 seconds. 40 seconds. SPY up to 390, 391s. Tesla at $172. Index break it down a little bit. It doesn't mean much. We got 18 seconds, guys. 18 seconds. Good luck today, team. Let's see what we get. Hopefully we get something good. All right, 5 seconds. All right, there's the release. Guys, there's the release. The data came in at, non-farms came in at 311. 311, much higher than expected. Much higher than expected. And what happened? The market dropped initially. And then the unemployment rate came in higher than expected as well, which is probably causing the market to go up. And so again, unemployment rate came in higher than expected. Market is ripping up basically exactly as we expected here. So unemployment rate came in higher, 3.6%. Payroll numbers came in way higher at 311 versus 205. But essentially, it's kind of mixed results here. But unemployment is a little bit heavier than non-farm data, and it came in higher than expected. And the market is bouncing up again. So again, 3.6% for unemployment, 311 for non-farm payroll data. We'll put the data up on screen. But yeah, unemployment 3.6%, non-farm 311 is the reaction, and the market's bouncing back here. So we bought some stuff up today. So that's good. We'll probably be making money on there. We're going to put the data up on screen so you can see it. But like I said, hit that subscribe button, guys. This is the reason thousands of people tune in for these streams, is because we cover the data fast. There it is on screen. Let's go ahead and start taking some profit here on some of the trades we bought just now. Specifically Google ripping up. Nice. And that's a great head into the weekend. Again, higher unemployment data making the market rip up right now. 393s. Yeah, some of y'all might be late. Again, make sure you hit the live button next to the play button. Some of y'all might be delayed on stream. But again, higher unemployment data, again, making the market go up. Somebody might have told you guys that, but I mean, we also told you that unemployment would weigh a little bit more than non-farm data. But again, I'm not going to say I told you so, but nice. We're going to go ahead and take 10 shares off of our Google trade. Yeah, I don't know if it's enough to make it hold up there. But again, the reaction was initially positive because, again, unemployment date came in higher. Now we'll see what that market does for the rest of the day here. Still doesn't mean the market saved. And CPI drops on the 14th, which will influence everything here too. So higher unemployment, like I said, higher unemployment rate is going to cause initially a positive reaction. It doesn't mean the market's going to hold up here, but if you look at the reaction we got in markets, again, unemployment rate was at 3.6%. One of the bearish signs, though, is that payroll numbers came in way higher than expected. But unemployment is a little bit heavier weighted than payroll numbers because of its unemployment. It's going to be widely more looked at than payroll data. It's going to be more known to look for. It's going to be widely more looked at than payroll numbers and payroll data. So again, unemployment rate coming in higher than expected means less people working, which means the market's going to go up, most likely at least. And that's essentially what we got here. Again, good is bad, bad is good right now. Sean, are you really going to argue that the move that we just got was a technical move, bro? Like, seriously, man? Come on now. What a silly comment, bro. You got to stop that. It makes you look it makes you look ridiculous, bro, if you're saying this move is technical. Yeah, all the big volatility showed up, all of a sudden exactly when economical data came out because it's a technical move, bro. Come on now. Be real here, man. All right, Tesla just broke highs here. Dixie breaking down. Again, we bought up a little bit of stuff ahead of this report too, so that's nice. Yeah, I don't know if it's going to hold. I just know what the reactions are. And again, unemployment came in higher than expected at 3.6% versus 3.4% expected, and the market's reacting positively. Yeah, nothing technical about it, bro. Again, it's... Yeah, but Sean, again, man. I mean, honestly, there's no point in even arguing about it, man. Yeah, well, I'm not even going to argue about it. All right, guys. So again, Google ripping up. We're going to take a little piece off of Google right here if we can and lock in some cushion profit. All right, so we just locked in some profit on Google here. The big companies have programs that use conditional statements to buy or sell in relation to incoming data completely manipulated. Well, yeah, for sure. I mean, there's always algorithms that trade. Again, I'm a programmer myself, so I mean, yeah, they're conditional statements. They're if-else statements. If data comes in X amount, do this. Stuff like that. But yeah, there's also traders that are just buying it up like this. Like just normal old school buying, if that makes sense. All right, Dixie breaking lows. Yeah, but again, payroll numbers are important, but unemployment's going to be a more widely looked at number. Yeah, thanks, Sean. It's all good, man. Like I said, you and I can agree to disagree on this move that happened right at 8:30 being a technical move. It's all good, man. I appreciate the support regardless, bro. All right, guys. Market consolidating. Again, we took a little bit off of Google, just locked in profit, like since we can. Payroll numbers did come in higher, which is going to be bearish. It is going to be bearish. So, again, we'll see if that starts to weigh down the market now. Yeah, I mean, again, payroll numbers were not good. They came in much higher than expected. And so, yeah, certainly not good. Unemployment rate came in higher than expected. That's going to be good. And again, so the initial reaction was on the upside because of unemployment data. But payroll numbers could eventually weigh things and make things reverse. That certainly could happen. Again, I'm not saying it's going to, but it could. Shout out to whoever was plugging me on StockTwits, man. Somebody said, hey, you should check this guy out. He always streams on data releases, super unbiased. Hey, my guy, man, Eloquent Panda. Whoever you are on StockTwits, I appreciate you. Thank you so much. All right, guys, Dixie breaking lows. Probably going to pop the market back up here. Yeah, payroll numbers were bad for sure. But that's my point. Is like I get so many people trying to argue obvious nuances of the market. Like obviously right now, higher payroll numbers is going to be seen as bad. Right now, that is almost universally agreed upon that higher payroll numbers is going to be a negative thing in markets. So almost universally, most people are going to agree that higher payroll numbers are going to be negative, right? Same thing for unemployment. Almost everybody, unless you don't really pay attention to the current market, you just kind of understand convention. Conventionally, it's the opposite. So conventionally, economic growth is good. Payroll numbers being higher is better. Lower unemployment is good. But right now, we're not in convention markets. We're not in conventional markets. We are in inflation-fearing markets right now. And inflation-fearing markets do not want to see higher payroll numbers. They just don't. And again, they don't want to see lower unemployment either. And so, again, that's a very obvious thing in the market right now. And arguing with me about it is silly, I think. Again, I'm talking about short-term market reactions. And again, I think this kind of confirmed I was absolutely correct about unemployment being stronger and more weighted. And unemployment coming in higher than expected is going to be seen as a positive. And of course, we rip up big from this report that showed it. Now, again, if we zoom out, though, we don't know how the longer term effect of this is going to be. We don't know what that effect is going to be. I think a lot of people are waiting for the market to pivot from a more inflation fearing market to a recession fearing market. And if the market starts to fear a recession more, again, it's going to pivot to the opposite. It's going to be, economical growth is good and economical weakness is bad, higher unemployment is bad, but right now we're not there yet, and the market's still very much fearing inflation. The market's fearing 50 basis points on the 22nd as well. The market's fearing CPI on Tuesday of next week, all very important gauges of inflation, right? And so that's essentially to understand the market currently, that's what we're in right now. That's 100% what we're in right now, and I think this data confirms it. But again, it doesn't mean much yet. We could also get a pullback here. Yeah, Tesla's still reeling up a little bit. Dollar index still consolidating around lows here. Again, we did buy Disney this morning and we bought some Google, and both of those are green on today, so that's good. Yeah, CPI is going to come out next week, which is going to be big. John, you are absolutely correct. Thank you. Thank you, Bao. I appreciate it. Thank you. Hot inflation cooling down. Now recession time started. Maybe. Yeah, we got a big old flag here for sure. Like you can see the flag pattern here. There's the flag. We'll see what the flag does, but the flag is there for sure. Um, yeah, so did SIVB get halted? All right, there's the market still reeling up here. Yeah, so this is, if you guys remember what my fear was, man, I'm so glad I exited this, guys. Do you guys remember the reason I exited this SIVB trade? Do you guys remember why? This is why I got so, man, I'm not going to say it was luck because I literally said exactly what my fear was and why I needed to exit it. To put it into perspective, what I said my fear was regarding SIVB was that it can get halted on the upside, resume back at like much higher levels, and ultimately I could be down huge amounts on a very small position. And we are now halted at almost 40, which is about $5 a share higher than I was in it. So yeah, it would have been really bad if I would have stayed in that thing, man. Super glad I exited it like I should have. Yeah, for sure. I got really lucky. Again, it's not even luck. I kind of saw this potentially happening, so it's not really luck. But I got out when I should have. Tesla breaking highs here, which is good, dragging the rest of the stuff up. How is inflation cooling down? Yeah, I'm not saying it is. I mean, I'll put it. Okay, inflation is better than it was last year. You know, that's an obvious thing. Inflation was at like, I can't remember what it was. It was like 8 something last year. So inflation is better than it was last year for sure. But it's still not great, obviously, and prices are still really high up. So I don't know if I would consider it cooling down, but it has gotten better from last year. Over the last 30 days, though, it's gotten worse. It's still not as bad as it was last year, but it's still not great. And I think that's causing the latest bear action in market activity. All right, Tesla flying up here, team, flying up. And again, I'm glad I bought the dip. Could have taken some larger size, but I think I'll sit in it. The change in non-farm was revised. Yeah, let me see. All right, so when was this halted for SIVB? SIVB was halted 11 minutes ago. All right, so yeah, non-farm payroll. And again, I think maybe like non-farm payroll data came in much less than last time. Last time they came in at 504,000. This time they came in at 311. Unemployment rate came in at 3.6%, so higher than last time. So those are all positive signs for inflation getting better. Canadian unemployment rate came out lower than expected, but those are all positive signs here. I wonder when SIVB is going to get resumed. Gangsta says, beginner trading, thanks for doing this. Met you on Trader Mike's years ago. Hey, thank you so much, man. I appreciate it, man. Also, guys, if you haven't already, check out TopStep, man. A lot of the ways you can trade this big economical data here. If you want to see how you can trade it, if maybe you don't have a large account like me, maybe you want to day trade some of this stuff. If you look at the E-mini here, and then you look at the S&P 500 futures contract, it's the same price action. So like this is the same as this. You can day trade this middle one right here. So you can day trade this one in futures with no PDT rule. You can day trade and short this one with no PDT restrictions. And TopStep is the most legit futures funded program in the world. They pay out millions of dollars in withdrawals every single year. And what they do is they give you a demo and they test your skill. And again, I lost thousands of dollars when I first started trading. If I would have had something like this, it would have been so much cheaper to learn trading under pressure like you're supposed to. So paper trading doesn't teach you too much because you're not under any pressure. Your emotions don't mean anything there. But these funded account programs are a beautiful middle ground of pressure. And so again, what they do is they give you a demo. And if you can hit the target on their demo and follow their rules, they fund you between $50,000 up to $150K with a 90% split. And again, they pay out millions of dollars in actual withdrawals to their funded traders every year. And they fund thousands of traders a year. And again, to be fair, I think most people are going to lose these challenges because, again, they're testing your profitability, and most day traders are not profitable. But the point of this is that it's so much cheaper to do this. You still have some pressure on you to succeed, but not the full extent of a live account. It's so much cheaper to lose a funded account program. TopStep's package, the base package is $140 or less for the base one. So it's a lot cheaper to lose that. You can even reset it for $100 and start over anytime you want. So it's a lot cheaper to do that than it is to put up the $15,000 or so you need in the futures market. And so it's the best barrier of entry in day trading where you can have some pressure, you can learn to trade, you can test your profitability, see if you're ready to scale up in size, but not take on the risk of losing thousands of dollars like most new traders end up doing. And so it's just a great middle ground of pressure. They are a sponsor of mine. So I'm definitely biased in their favor, of course. But again, this is regulated by the Chicago Mercantile Exchange. They pay out millions in actual withdrawals, and they're just a beautiful way to test your skill as a trader without taking on a lot of risk. Here's the link. You can also find the link in the description. You get 20% off if you use my link. Great way to help support the channel. There's the link right there. Check it out. No, I use Quant Tower. Right now, this is TOS on the screen, though. What happens to open position if trading is halted? Well, you ride it up. You can't. They basically restrict trading. If it's halted, you basically can't get out if you want to get out, right? So you're basically stuck in a position until they resume. Most halts are 5 minutes. Most halts are 5 minutes, but sometimes when a company is getting investigated or when some big fundamental release is happening, they halt the stock for much longer. Sometimes days, sometimes hours, sometimes minutes. It just depends, and it varies from time to time, Yeah, I like this old playlist of mine. This is an old playlist I had from years ago. Well, the people who were holding Twitter when it got bought out were just paid the buyout price, which I think was $54 a share, $54.20 or something, $54.20 per share is what they got paid out. Yeah, for sure. I've seen people get stuck in halts all the time. All right, market's still reeling up a little bit. Again, all the trades I bought this morning are doing pretty well. I think this is a good sign up until Tuesday, maybe. But SI is on the move, really. SIBV is halted here. We'll see what happens on that front, though. Here's yeah, there's Silvergate finally starting to reel back here. Been a rough couple months for Silvergate. Tesla bouncing up pretty big on this data, too. All right, guys. So Silvergate ripping up. SPY testing 393.50 high level here. And it looks like buying the dip after the extension was the right move. And again, we call this move all the time. Where we look for big extended pullbacks and we buy those dips. We bought up this morning. If you guys remember, we bought Google and Disney. Both of those trades are up really nicely. And Disney, we're up about 80 cents a share or so. Google, we are currently up. What is our average there? Yeah, Google, we're up about 80 cents a share as well. So both of those were up. We're sitting pretty tight in these. I think I'm just going to let them ride, though. You know, I think I might as well let them work for me. All right, market's dipping down a little bit here. I'll probably go ahead and lock. I already locked a little bit of Google in. I'm going to lock a little bit of Disney in as well there, just to capitalize on it, since I'm already green in it. So just lock a little bit more. Market dipping down a little bit. Are we buying this dip here, team? Let me know. Yeah, let me end this poll. We did a poll already. Are you bullish or bearish? 55% bear, 45% bull. Looks like they were wrong on this one. With higher payroll and unemployment data, does the market end green today? Let me know. This is a good poll. With higher numbers, does the market end green today? Let me know. All right, market pulling back a little bit. Like I said, scaled out of some of my swing trades there. It depends on what platform you use, Cody. I'm pretty sure you can. Depends on what platform you use. So how many people have changed their mind on the data coming out? All right, Tesla bouncing up a little bit. There's SI. When's SIVB? Y'all yell at me if you see SIVB rebound here. It's still halted, which is interesting. Dollar index is probably dropping or probably going up short term, but down overall from the data release here. Yeah, so that's exactly what we're getting. All right, guys, market dipping down some here. Still waiting and trying to be patient here for all this stuff. But, yeah, we'll see what the data looks like at the opening bell. Yeah, we covered some of our longs, which, again, in hindsight, looks like it was the right move. Cardano up today. Yeah, I thought bear, but too much selling yesterday and positive news today. Yeah. All right, there's a little rebound here, dragging everything else up too, which is nice. And again, before we take a look at the rest of this, guys, check out Chart Prime as well. Chart Prime is another one of my sponsors. And again, we try not to plug anything for the first few hours. This is actually our second plug of the day. And so we actually haven't plugged anything today, except for one Top Step plug and one Chart Prime plug. And we've been streaming for hours and hours and hours. So yeah. Check out Chart Prime here just to show you how useful Chart Prime can be. What Chart Prime does is a trading view indicator service that gives you custom alerts and signals. All right, so this is a trading view indicator service here. So they give you possible reversal signals. They give you bearish and engulfing candles. They give you range support or resistance. You can see the bottom range support, the top range resistance. They also label support or resistance from the top, from the strongest to the weakest. And you can see this dotted line here is the strongest support or resistance. But let's just check their accuracy here for these reversals. And again, I can't guarantee you're going to make money. They are a sponsor of mine, but I can't fake what I'm about to do. So let's just check the accuracy. So again, reversal down right when we hit the range resistance, as well as the reversal down signal, and a nice drop from that. All right, so that's one. So it was right about that one. Let me zoom out. This one looks like it was wrong. Right, so that's one right, one wrong. This one was definitely right. Drop. This one was definitely right. Drop. This one was definitely right. Bounce. All right, let's keep going. So that's like five right, one wrong. This one was definitely right. And again, I think the edge when two of them show up together at once is even stronger. Nice little bounce. So that's like 6 right, 1 wrong so far. And this is today's price action. Let's look at this one. Ooh, this one was really right. Look, reversal up signal and a bullish engulfing, and you had some support. Nice bounce over like an hour period of time. So that's 7 right, 1 wrong. This one had a little bounce, but we'll go ahead and count that one as wrong. So that's 7 right, 2 wrong. This one was right, bounce. That's 8 right, 2 wrong. This one was right. We got a little bounce. That's 9 right. This one was right, bounce. This one was right, bounce. This one was right, drop. This one was right. We got a bounce. This one was right. We got a drop. This one was right. We got a bounce. This one was right. We got a drop. This one was right. We got a drop. This one, I don't know. It's a little bit up in the air, but you can kind of see this thing can be surprisingly accurate if you use it correctly. It's called Chart Prime. They give you reversal signals, and this is just a small piece. They also give you candlestick patterns that you can look at as well. They give you chart patterns that you can use. And the great part is that it's incredibly cheap. It's incredibly cheap. 35 bucks a month for that. And again, it's a trading view indicator. So you can use it on stocks, crypto, Forex, future, anything that you can use on trading view, you can use it. And so I'll post this link here. Great way to help support your boy. There's the link. Check it out. Yeah, I'm gonna please just as a request, please don't. It's too hard for me to vet anybody here, man. And a lot of people, what they try to do is they try to go to streams and they kind of try to subtly promote themselves or associated channels, and so they'll have them and maybe another person plan it out and be like, yeah, we're going to go to the stream and we're going to act like, oh, this guy is just so famous, right? Like, and again, I'm not saying y'all are doing that. It's just too hard to vet. And just as a general request, please don't plug anybody else here. And I think you're probably fine. But yeah, please don't plug anybody else. It's just too hard to vet. We don't know why it's halted. I can look at the halt codes to see. And so right now, what's halted specifically? When did SVIB get halted? Oh, there it is. News pending halt. So a news pending halt. It's either going to be a government buyout, a bankruptcy announcement. This is a news pending halt. So that'll be interesting to watch. News pending halts are big, and so they could last all of pre-market. We don't really know. Who contradicts themselves? By Can. You saying I contradict myself? Number one, I always tell people I don't really know what kind of reaction we're going to get. What I'm talking about, though, and I think the way to look at it is you have to look at it in terms of short-term inflation-fearing markets. And so again, we cover this all the time, and we kind of say the same thing over and over again because this is the reactions that we generally get from it. All right, which is that inflation-fearing markets do not want to see economical growth, and unemployment influences economical growth. And so anything that means more people working means more people spending. More people spending means inflation and prices are worse. And that's kind of the reaction we're going to get. Kind of the same reason like the dollar index is usually an inverse correlation with the Dixie and the market. And you can kind of see the dollar index is a good example of this as well, where the dollar index dipped when this data came out and the market pumped up. Why is there an inverse correlation with the dollar index going down and the market going up? Is because the higher the dollar is, the worse inflation is getting, right? And the more scared the market is getting, and vice versa. The lower the dollar is getting, the more optimism the market has. If you look at this, so like, the dollar index dropped and the market did this right here. Why do you think that is? Is because people fear inflation, and the dollar's weakening is going to be seen as a positive because inflation problems are real. And so the AI probably contradicts itself a lot. All right, so SIVB has not been able to raise capital and growing concerns on the horizon. So interesting. No, I think they're still going to do 50 basis points. Yeah, all good by Can. All good, brother. No, I think they're still probably going to do 50, but I'm not 100% sure. There's an inverse correlation between the Dixie and the SPY. There's a few reasons for it, but again, one of the main ones is inflation. The other one is that, like, if your cash is gaining value, you're going to sit on cash. You're not going to invest it into the S&P 500. If your cash is losing value, you're more likely to take it and put it into other risk assets like the S&P 500. And that's essentially what, kind of what happens. All right, looking at our newest poll here where we asked people, does the market end green today? 52% say yes. The SPY is technically green on the day, slightly up relative to where it opened up this morning. Financials are still negative, so the fundamental narrative is pessimistic. Yeah. Short squeeze today? Maybe. Well, I think AI is going to get to a point where it's much more powerful than people realize, man. I think again, as a programmer, eventually AI is going to get to the point where like you're going to have dedicated specific programming language AI systems that write entire program software and develop stuff for free for you, and I think that is incredibly powerful, and that's going to make a lot of programmers not have to work as hard, and it's going to make them produce a lot more software as well, which is going to mean technological growth, and it's going to be much more exponential technological growth from AI systems. And I don't think they're quite there yet. Like, I've tried to use Chat GPT to write some code for me, and it's not the best code. It kind of spits out spaghetti code, but it'll eventually get to that point. And I think that's where the optimism and hype surrounding AI comes from, is that eventually it's going to get there. It might not quite be there yet, but it's close right now, to be honest. It's very close. It could already write basic code. Like, if you're just a pure front-end developer, it could probably write a bunch of good stuff for you. But if you're trying to go with like complex algorithms and data structures, it's not going to really do it great. But that's okay. The fact that it can write any code for you is useful right now. No, I don't think 80% of programs are lose their jobs. I think that it's just going to cause programmers to build more stuff. And they might be, I don't think they're going to lose jobs. I think there's going to be I think AI is going to write code. And I think there's going to be like an overseer who controls it. Right, for sure. All right, Dixie popped up. Market will probably drop on the dollar index going up. Higher payrolls are not good. It's mostly unemployment rate pushing the market up, I think. But, I don't know. Everything you use ChatGPT for is recorded. Oh no. They're going to know that I try to write JavaScript code. What is the world coming to, Like, no, I think that's sensationalizing it. I think it doesn't really matter too much. I think most of the stuff people are putting into it are not going to be super personal information, So I don't think that matters too much, to be honest, Yeah, for sure, Derek. That's probably what it will do. All right, Dixie breaking the low, or testing lows right now, breaking the low in the last couple minutes. Let's see if it ends up breaking the full low right there. And if it does, it probably will push the market back up. All right, John, what's causing this fear in financials? The collapse of SIVB Bank. So the collapse of SIVB is causing the markets to essentially drop. The banking sector dropped massively yesterday because of the collapse in SIVB. SIVB dropped 80% over the last 24 hours or so, and that's essentially what's dragging the market down. So that collapse is causing panic, and it's making people sell, is what it really is. Yeah, for sure, Pawn. Market Oracle fish. Market Oracle. All right, market pulling back a little bit again. I sold some of my Disney and Google at the open after some of these releases because I just thought it was time to. Yeah, the question is if these payroll numbers eventually tank the market like this. Payroll numbers were much worse. They were a much larger miss. So it is possible that this initial reaction from unemployment doesn't hold, and we start to contract back down and start to test lows. That is certainly a possibility here. Um, Again, I'm not saying that's what we're going to get, but it's certainly a possibility. No, I don't think people are necessarily happy. All right, so market just went red on the day, and we will pivot to more shorts. Uh, like I said, we locked in most of the profit in Disney and Google here, so that those trades are safe too. We're still very green on those, and we'll see what we do. If we break down, we'll maybe hold the rest break even or so. All right, we're gonna get ready to trade some futures today, guys. Futures trading today. Oh, yeah, there we go. All right. So futures trading time. Market's starting to break down a little bit. We might short a little bit here too. Pull up the regular E-mini. Yeah, it kind of goes to show like anybody critical of my slowness in passing these funded account programs. It's like, bro, like I'm just so used to trading actual money that like here's my monthly graph on Top Step. Like that's a pretty graph, right? So like this is my monthly graph. My profit, my win-loss ratio on the month so far is 3-1. So I'm winning I'm winning, a large majority of my trades. 3 out of 4 trades I'm winning. 75% or so. And again, I'm just not used to trading super large, and so my problem with these comes in like trying to take swings, like larger swings. Um, you know what I mean? So it's just kind of a slow grind, is really what it is. If you look at the last 30 days, our graph is even better. So not too bad, but so far this week, this is our graph here. So pretty solid week, and we'll see if we can keep it up. But depends on what the market gives us today too. Yeah, for sure. I'm happy with it. Again, I don't know if we'll keep it up, but you know. Did I argue about something recently, Kenneth? I'm genuinely not sure. Did I argue about anything recently? And I know we have kind of debates here, but like I don't really think I'm arguing about anything recently. I'm not really mad or arguing about. Last thing I argued about was again, I think with Sean, the technical comment. Is the last thing I was kind of talking about, but I don't think I've really been arguing with anybody recently. 75%, 100%. Yeah, I mean, but debate's healthy, Kenneth. And so a lot of times we're just talking about topics that, some people might disagree with me on, but it's all good. Like I said, it's not really arguing. Y'all let me know when Silicon Valley Bank resumes. I'm really curious about that one, to be honest. Yeah, talking is good. It's good moments. No, I'm not going to use it one day on stream because, stop arguing about not arguing. I'm the top 3 most arguers about not arguing in the world right now, bro. Definitely top 3. All right, market's starting to reverse here. Could be pulling back a little bit. Again, we'll start to short some stuff too if it does. Oh, I already know, Kenneth. I was born in this, What's the Batman quote? Somebody say the Batman quote. I was born in it. You were just raised in it. Something like that, right? What's the Batman quote? Markets start to break down. 390 will be an interesting level, and 390 is right around here. So that's about 390. Yeah, let me make sure this is right. Yeah, 390. Okay, no, 390 is actually right around here. That's 390. All right, so again, we'll see what happens. Market's edging closer and closer to it now, though. You're too problematic, John. Just chilling and talking calmly all the time, and that's a problem, you know. Yeah, there it is. Yeah, all good, Kenneth. I'm just kind of messing with you, bro. It's all good, man. 100%. Definitely top 300% sayers in the world right now, quitting. All right, guys, we got 10 minutes. 10 minutes. Let's see what we get today. I'm ready. Good week so far for my trading. We'll see if we keep it up. Yeah, so far we're basically flat down the middle right now. We're right at the previous closing price or so. We're within 50 cents of the SPY at the previous closing price. Tesla is actually really green on the day. It's at 175 now. To be honest, I'm not really confident enough buying anything right now. I think we're kind of middle range in a lot of different ways, and so I just don't know if I really I don't know if I really want to buy anything right now. I think buying at the middle of the range is usually the worst place to buy it because there's no directional clues short term. So I think I'm just gonna wait. We got 9 minutes until the market opens, not 3. Do you have a name for your office? The lair, the dungeon? No, not really. It's just my office. I've got the 8th diamond guy right here. If you can see this, sitting on top of the fire. Can y'all see that? Let me see. Can y'all see this right here? You know? It looks like a shrine of the 8th guy. You see this guy? You know? Looks like a shrine of the 8th guy. So. All right, basically completely flat from the jobs report. Completely flat right now, right at where we started it off. So again, big level here. We got the 390 psychological level right there. So we'll see if we hold that. Oh, the bull right here, yeah. This thing is actually heavy. Carol got me this. You know. All right, team. Let's see what we get today. Where do we close today? Any guesses? Where do we close? Dixie just broke lows that should theoretically make the market go up. So let's see if it does. All right, guys, we got 6 minutes. Am I out of coffee? No, I guess still got a little bit. Yeah, I don't know if anybody thinks we're in a good place right now. I certainly don't think we're in a good spot. I think we're pulled in two different fear directions, inflation and recession fears. So I think regardless of which direction economical data is going on, I still think we're in kind of a limbo. Coffee cup is too big. Yeah, Carol got me this cup. It says, "I love my wife." Yeah. Well, it's a huge cup, you know. But hey. Where's my 100K tat? Bro, I don't have a tat. I got this thing right here. You know. I got this thing. But I don't have my tat. I don't think I'm going to get a 100K tat either. The only stock market tat I was ever going to get, I was going to get an AMC tat if it broke 100, but I was confident it wouldn't. That's why I told people I would. All right, team, listen, we got 4 minutes. 4 minutes. $500K subs tat. Yeah, so is that why it's news pending halted? I don't know how you sit there all morning. I've been in the bathroom 3 times since 8 a.m. Those are rookie numbers, bro. You gotta have a strong bladder like I. You know, those are rookie numbers, sir. All right, market's trying to bounce. Let's see if it does. Again, I'm not saying it will. 390 support level. When did I get married? A decade ago or so? Puts on the inverse Kathy Woods. That basically means you think the market's going to go up. Kathy Woods is investing in a lot of blue chips. All right, guys. So 2.5 minutes. All right, still about flat now in my other swing trades. We'll give the market time to bounce at the open, but yeah, I mean, I think Kathy, I disagree with a lot of Kathy's picks, to be honest. All right, so the CEO of Silicon Valley Bank sold $3.7 million worth of stock within the last 2 weeks. He knew something was coming, basically. Market bouncing back up a little bit here. We got the open about 1.5 minutes, but yeah, so the CEO, which his name is Gregory Becker, sold 12,451 shares at an average price of $287 for about $3.6 million within the last 2 weeks. So my guy knew. All right, guys. So market bouncing up a little bit short term, but it doesn't mean much here. 20 seconds, guys. 20 seconds until the opening bell. Good luck today, team. right, here's the opening bell. Market moved up a little bit ahead of it, but there's the opening bell right there. So let's see what we get. Tesla dipping down at the open, but the SPY actually moving up some. Tesla with a big breakdown at 174 is currently here. When that qualifies insider trading, I don't know. Yeah. All right, market dipped a little bit. Banks are still struggling is what this is. Banks are still coming down some. Silverbank or SVB still halted. But yeah, breakdown in markets at the open. This looks weak here. Take one contract short. There's the open. There's the drop. We're still getting drops here. Go ahead and cover that. So we shorted a little bit into the opening bell here. Everything else still kind of falling down. So we shorted a little bit of the pop at the open. All right, there's Tesla starting to rebound here. Big downwick coming in too. All right, we're buying this, and we're not going to hold this too long. We'll cover a break even depending on what happens, but we're buying this. Tesla just went red to green. Everything else starting to come back. So that's good, but the banks are really what's struggling. FRC is halted on the downside. Tesla's ripping up though. Tesla's kind of the one stock that's doing okay. All right, we just cut that too. So we just scalped out of that too. Yeah, we're up about 20 something on the day now. Little cushion here. Market's starting to bounce back though. It's dragging the rest of my swing trades up nicely. Disney, Google. Cup and handle pattern forming here, so we're gonna start buying some stuff. There's two contracts. Cut half of it right there. See if we get another little pop up here. All right, we're just gonna go ahead and cut the rest. All right, so we're up about 45 on the day now. Bought the little cup and handle dip. Tesla pulling back some now though. See if we buy the rest of this, but we're up a little bit at the open. All right, there's the rejection. So again, we will pivot to shorting again if this weakness continues. This looks weak here. Two contracts short now. All right, three contracts short. Four contracts short. Looking for a quick flush. We already got a cushion, so we can take some larger size now at the opening bell. See if we can catch a flush down. All right, we just covered half. Took another half off. Okay, we'll cover the rest there too. All right, we are now up about 70 something on the day. Sure to get to that momentum on the downside. Tesla testing lows here, but yeah, FRC is halted. First Republic Bank is halted. Let's look at JP. JP Morgan's actually bouncing back. So, you know, again, I'm not going to be super short biased at this point yet. A little pop back up. I'm gonna short one contract into this just in case we get a big rejection. So we're gonna crack lows. There we go. There's the crack, the low crack. Didn't take big enough size here yet. There we go. That's better, I guess. About flat here now. Tesla is really what's breaking down. Tesla at 170s is dragging the market down with it. There we go. All right, we'll go ahead and cut that now. Up about 85, 90 on the day. No losses yet. Gotten in about 5 trades so far. JP Morgan with a big rejection at the previous closing price too. Right, I'm going to short some more actually into this bounce. The reason I'm doing this is because JP Morgan is basically starting to test lows. And so I think other banks are starting to look weak despite the small little pop back up. And I think that's a rough sign for it. But again, we've got a cushion on the day. We're not going to take more than 2 contracts so far. And maybe we'll change our plan. But for now, just 2. And this might be our first loss. I'm going to cut it right there. We lost about 20 something on it, I think. But first loss of the day, which is all right. Still up nice. Still got a cushion. Everything else kind of bouncing back a little bit too. But we get a big enough upwick here, we will short some more. Oh, no, I didn't mean to buy 2 contracts there. That sucks. I didn't mean to buy 2. I only meant to buy 1. All right, now we're flat. I guess that's good, but I didn't want 2 contracts here, to be honest. I guess it's going to turn out well. Just covered half. I'll go ahead and get out the rest there since we got it. I didn't really want to take that big a size. So it ended up working out, but yeah. All right, so far we've had like 7 trades. We've lost 1. Tesla breaking lows. JP Morgan bouncing back a little bit. Right around the lows again here. I'm going to take 1 contract just in case we break the low and have a firm, like, fast breakdown. But the risk is small. And we're not going to hold it long either. Just in case we get a low of the day break, you know, we can make a little bit from this, which is exactly what we got there. And we'll go ahead and cover that too. So just a little scalp. Again, you can kind of hear the thesis that I make ahead of the time, and then you can kind of see it follow through there. We did get the low of the breakdown, which is kind of like sometimes we'll get like a big smack down at lows, and so kind of gives me the unique opportunity to have like a low risk trade there quickly. And maybe I could have held it a little bit longer, but it's all good. Like I said, we've traded almost 10 times today. We've lost once on this at least. Y'all let me know if SIVB resumes. Still nothing yet, it looks like. Tesla's still cracking down. Is it time to buy some stuff here? I don't know yet. Yeah, not yet. Obvious downtrend since the opening bell. Hey, thank you, Hassan. I appreciate you, bro. Thank you, man. Crypto, I'm sure, is getting destroyed right now. Coinbase, honestly, Coinbase is doing good for it being over $50 anyway, to be completely honest. Laid back and honest channel. I appreciate it. Thank you, Hassan. I appreciate you, man. Yeah, you guys know me. I have no idea what the market's going to give us. And again, I tell you guys that every day. I'd rather just be real about it. I mean, I think they got enough day trading gurus out there trying to sell courses on publicly available content for my liking here. I'd rather just be real and say, hey, I have no idea what's going to happen. And then that way I can sleep good at night, knowing I'm not kind of manipulating people, even my sponsors. Like anytime I plug a sponsor, and again, if you want to check out Top Step, check them out. They're a funded account program for futures. They give you a demo, and if you can hit the target on their demo while following their rules, they fund you. It's a beautiful way to test your skill without taking on a lot of risk. Like a lot of new traders end up taking way too big of size when they first get started trading. As they're learning how to trade, these funded account programs give you a really unique perspective where you have some pressure, but if you lose it, it's not the end of the world, unlike putting up 10 or 15K yourself trying to trade that as a new trader. And so they're very useful. They test your skill. If you could pass them, they also fund you legitimately. But again, they are a sponsor of mine, so I'm certainly biased in their favor. But they're really something I wish I had when I first got started trading, because I would have just saved me money. But like I said, I'm certainly biased in their favor. But if you want to check them out, like I said, that's my third plug of the day, and it's been 4 hours since I started streaming. So will March 9th go down in history as another black swan event for the U.S. banking sector? It could. It certainly could. I'm not sure if it will. It certainly could. Depends on what happens now. Bro, this dip is surprising. Does this mean we are fearing recession more than inflation? The banking sector is what's getting hit. So I don't think it has much to do with the initial reaction we got at 8:30 was from unemployment being higher than expected. And so we got a positive reaction. What we're reeling from right now, though, is the banking sector breakdown from SIVM. Or what is it? SI, what is it? What's the stock? I'm sorry. Is it SI? Whatever the bank that failed was. I forgot what it was. SIVB? Yeah, SIVB. SIVB's collapse is what's been dumping the market down over the last 24 hours or so. And so I think this is a continuation of that. If you look at banking stocks, they're down today as well. Bank of America is getting hit down to under $29 a share at some points. JP Morgan's down big on the day. cap one is down. You know, you got a lot of banking stocks are just getting hit. And so they're kind of weighing on market sentiment. Another big thing that's been dropping other stocks is crypto's downfall and demise. Well, it's affecting all banks, is what it's affecting. But finance is certainly what's dragging things down. We're not anywhere close to a crash yet. In order to actually crash, we would have to hit, to show you on the market, a crash, for it to be a real crash here, team. For it to be a real crash, the SPY would have to hit this here. So, I mean, we're not anywhere close. We've had a couple big red days for sure, but like, just to put it into perspective, we're just right here. You know, like the market has actually been in an obvious uptrend since October lows, right? And so in order to justifiably crash, we would have to not do this, which is what we're in right now. We'd have to do this. So red days are, you know, the market certainly doesn't look good today, but I think it's important not to sensationalize it, you know, and maybe this is the straw that broke the camel's back, and maybe this is it, but we're not there yet. You know, we're not there yet. And I think CPI is going to be the big important metric to watch next week. Yeah, so in other bad news, though, the SPY did just break the lows of pre-market. So we are down under 388, essentially under 388. We cracked under 390, which is this level we drew here. And since then, we've basically been straight down. Who's saying it's not a red day, Viva? Yeah, I don't think anybody's arguing it's not a red day. Of course it's a red day, bro. It's a pretty rough looking red day too, you know. But again, I mean, like I said, all I'm saying is we're not crashing. Nobody said it wasn't a red day, you know. What happened and why? Banking sector is super red because of a bank's collapse yesterday. SIVB dropped 80% over the last day or two. It's gone from 280 all the way down to 30s, where it was last seen before. It was halted on a news pending halt. That breakdown has essentially crashed. Not crashed. Crash is the wrong word. That breakdown has essentially tanked the financial sector over the last day or so here. So that's basically what's going on. Is the breakdown is happening from the financial sectors dropping over the last 24 hours or so. But again, it's important not to sensationalize the market. Like, is this down action good? No. Does it mean we are crashing? No. Okay. Again, the easiest way to look at the market long term is on a daily chart. All right, so here is the SPY, which is the S&P 500. This is a daily chart, right? We're red on the year, obviously. But again, this drop, we're not really going to be in risk of a crash, team, unless the SPY breaks under this right here. I think this is a bad sign if we dump all the way down to 375s or so. Even then, it's still not technically a crash. A crash would mean we drop really under 340, right? And so if that happens, then you're going to be on, then I'm going to be on crash watch. Right, we start to break down under these levels here. The next one, it would be under 360. We break under 360, then a crash is much more likely. We break down underneath 350, we're essentially at a crash point. So that's the way you got to look at it. And again, we're definitely in a sea of red today. No argument on that part. But we're not at a crash yet. So, Bob, are you saying the SPY breaking under 390 is a crash, bro? Like I said, I get it. People might be short, and I get it. People might be calling for a crash, and obviously the market doesn't look good, But again, over the last 6 months, we're green. I'm not sure why that's like a big deal. Me saying we're not crashing. What's the purpose of, Yeah, Fridays are usually red too. All right, so here's a little bounce back in markets. Is JP Morgan green on the day now? That'll be a good sign if banks start to bounce back. And I think, so JP Morgan actually just bounced back. I think JP Morgan's leading this rebound in markets today, which is nice to see, Yeah, so JP Morgan just ripped over 130, which was right around the previous closing price. And it started to bounce back too. Bank of America was one of the ones that are really red on the day. They're almost back up to $30. So again, we'll see if we rebound some. The market's trying to rebound right now. All right, guys. So my Disney trade just went back green on the day. Market's bouncing back pretty strong here. And so again, as I said, it's important not to sensationalize markets. Bob, the fact that you're calling me a perma bull and trying to be critical on stream, like I said, it's okay, I guess. But it really does just show emotion, man. But yeah, market's back up a little bit. Again, let's see if it holds. But like I said, guys, maybe we crash. Again, I'm not saying we don't crash. I've been mostly shorting the market today. And so calling me a perma bull, I don't think I've taken one long position in terms of intraday trading. Like, I made money. This is all on the short side. All right, so look, here's another drop. I'll short some more if we get a small bounce from here. Like, if we get a small candle that moves up, I'll short that. Yeah, let me see if I can short that. All right, 2 contracts here. We'll see if that acts as resistance. There we go. So there's the resistance. Let's see if we get the breakdown. We're going to take half off there. We caught the rejection. Look at that line, bro. We drew that line right at where we rejected here. All right, we're going to go ahead and cover that too. All right, so up about 100 on the day, a little bit over 100 now. You can kind of see from shorting the market. Now, again, what you really want to watch right now to determine whether we keep breaking down is the banking sector. Okay, Bank of America popped over the VWAP, and JP Morgan went green on the day. If they hold, that's usually a very positive sign for markets. Especially right now with the banking collapse yesterday. Tesla also ripped up and hit the previous closing price. So I think an important level to look at on the market right now is this level here. Yeah, I'm certainly not a perma bull. If I was perma bull, I would have, like I said, I basically called, and like I said, I kind of take offense to being called a perma bull because I basically called the Jerome Powell drop that we had this week. Like, if you guys watched me this week, I covered all my swing trade positions, and I was holding a few of them ahead of Jerome Powell on Tuesday and Wednesday. And the reason I covered most of my positions there was because I thought that Jerome Powell would say more pessimistic, hawkish things, considering the change in inflationary metrics and data that we got over the last 30 days, right? That turned out to be absolutely correct, in that he basically updated us and said that they would have to be more aggressive than initially anticipated last time he spoke, right? So I was spot on with that. I called it to the T, exactly what would happen. And so that's my point. If I was a perma bull, I wouldn't be saying that stuff. I would be saying, no, Jerome Powell's going to say, dovish things and the market's only going to go up. But again, I didn't think the market was going to go up. It really depends on the nuance of the market. I think you get a lot of people who, like I said, you get people who call bulls names and you get people who call bears names. And I think both of them are wrong. I think that in the end, you got to just kind of go with the current flow of the market and not be too biased to one specific side. And I think that's pretty obvious. It depends on how long I'm holding trades to. Right, 100%, Eric. I'm not a perma bull, but I don't want the market to do well. But I want the market to do well. Absolutely. Yeah, perma bull t-shirt coming soon. Hey. Hi, perma bull. How you been? I've been great, bro. I've been amazing, man. But yeah, market's starting to rebound a little bit. We'll see if it holds. This is a good kind of sentiment changing level right here on the chart, I think. How about perma pig? Peppa Pig, in my opinion. Yeah, did you see a lot of people made a bunch of money on SIVB today? SIVB put options. There was somebody that bought like $7,500 worth of SIVB put options. They made like over $1 million from them. And so I'm kind of jealous, bro, to be honest. I am genuinely kind of jealous of those trades, bro. I wish I would have had the balls to do $7,500 in put options. That would have been beautiful, Yeah, I'm a little bit both ways, Don't take that out of context. Hey, it might be gambling, but that time it paid off, bro. The problem with gamblers, though, is that a lot of the time they can't walk away when they're ahead. Like the way I know I'm not a gambler is because I don't like taking large risks. I don't like it when my heart's beating super fast and trading. Anytime I gamble at a casino, I try to leave once I'm green. Where it's like gamblers can never put it down. So I just hope your boy who made 1.2 mil is going to walk away and not put it more into options and lose it all back. Well, it depends on definition of gambling, Raul. If your definition is risking money, we all gamble at everything all the time. If your definition of gambling is being unable to stop, I hope I'm not that, at least. I don't think I am, but yeah, Disney started to bounce back up. Again, we're pretty close to break even and flat on that one now. When is SIVB going to resume? So SVB financial deposit outflows are outpacing the sales process, according to CNBC. Attempts to sell itself are in doubt. That's essentially what's breaking down the whole financial sector today. Market started bounce back. SPY almost back up to 390s. Well, not if I go green on my first hand, but what I'm saying, if I make enough money to where odds are against me where odds are against me to continue playing and profit, then I'll leave. I'll walk away, you know. All right, so Disney, we're now green on our trade. Google, we're break even now too. So again, we're trying to be patient with these. We added a little bit to Disney. Exactly. You said exactly that. Anyone that tuned into the streams, no. Yeah, thank you, Andrew. I appreciate it, man. Like I said, sometimes it's not easy for it's kind of like sometimes bears will just get really I'm trying to think of the word. I mean, biased is and bulls do too. To bears' credit, bulls do the same thing as well. But sometimes people, okay, here's the best way to say it. Sometimes bulls and bears treat each other like enemies, and they're not. Like everybody, you should be able to just respect whoever's direction. Like you don't have to call them names, you don't have to insult them. That's kind of where I think it's getting taken too far. If you start calling bulls names for being bullish, or if you start calling bears names for being bearish, I think you're being a little bit too emotional about things, especially if I'm flat. I want people to make money, in my chat room at least. All right, so market just popped over 290 or 390s. Yeah, 390s. Market just popped over 390s. Yeah, people act like bull and bear are like blood and Crips, All right, so SPY back over 390 for a split second, rejecting back down. We're also right at the volume weighted average price. Daniel, yeah, hey. All right, so we got a little trend here. Let's see if this trend continues. All right, so here's that trend. You can see the trend pretty obviously. We're green on the day. But honestly, I think these funded account programs, I think I'm so used to trading small that it's hard for me to scale up in these funded account programs. It really is. I'm like, my TOS account's 100K. I'm not used to making over a couple $100 a day in these accounts, right? And so in these funded account programs, I know you're supposed to trade large. It's kind of hard for me to do so. It's just not how I trade. And I think reinforcing that small risk in each trade took me a long time to do that. It took me a long time to be okay with making small amounts of money. And so these funded account programs, it's hard for me to scale up. Again, if you look at me over the last month, you can see I'm consistent trading. People can try to make fun of my trading, but this is actually pulled directly from the platform. This is my graph over the month of March so far. And so it's I'm just not used to trading large. That's my biggest hurdle with these funded account programs, is trying to trade large and take the risk you're supposed to. But I think you have to if you're in these accounts, though. All right, so let's see if the market breaks out of this trend. You are much better than me than trading. Hey, thank you, IJ. Thank you, sir. I appreciate it. All right, so again, SPY testing VWAP and 390 level. I am trading on Quant Tower. Yeah, I don't know when SIVB is going to be unhalted. Part of me is we're in that weird situation where part of me is hoping I would have stayed in it, because honestly, if SIVB breaks down to $10 a share, I'm going to be really bummed out I cut that trade. But if it rips up to 70, I'm going to be very happy. And so we'll see which way it unhalts. I don't know when it's going to be. It could be next week. We don't know when the stock is going to stop being halted. We really don't know. Why don't you like scaling up? Because I think the larger you trade relative to your account size and risk, the more risky the trading gets and the more likely you are to lose your account as a whole. And so it's like, if I can make money small size, I can do this all day and make money. The problem comes when you try to scale up and rush it, you know. All right, yeah, market's starting to rebound back up here. Again, Disney's doing well. We will take some profit in Disney if it continues to bounce. But I mean, I think this is my point, guys. Like, so think about how many people were screaming doom and gloom 5-10 minutes ago. You know what I mean? Like, think about how many people were genuinely screaming doom and gloom that this was the spark of a new crash that was happening now. And like, think about how many people were like that. That is my point here, that we're making fun of shorts or making fun of longs and all that stuff. We've essentially bounced back all the way to where we were before. And so the overarching point is, don't sensationalize movement, you know? We're going to take a little bit off of Disney now. We've already added some size to it. We'll take some off here. Locked in some cushion on Disney. And again, with that said, I'm not saying we don't turn and come all the way back down. All right, market's bouncing back here. Again, we took some profit in Disney. Just gonna sit back now. Let the rest of it work. We've already done something where we've locked in somewhere. We're not going to be red on the day, on Disney at least. Google, we're still green, but lesser green. Yeah, maybe we pull back some. Like I said, I really don't know. You know, again, it's possible we come all the way back down today. But the bounce back is basically the full move we've had since the opening bell. Again, here's the opening bell. So we basically bounced all the way back to where we were prior to the open. And again, maybe we come back down. I'm not saying we don't. All I'm saying is that, like, and y'all have to understand my bias too. Every day I hear people yelling crash, crash, crash. And it's like, very rarely do we actually crash. All right, so here's an interesting spot. The SPY is right at 390, slightly over it, pulling back to it now and pulling back to the volume-weighted average price. And so it really is so I do agree that this is an important spot right here. So the volume-weighted average price on the SPY is right around here. A little bit higher than that, actually. So the volume-weighted average price on the SPY is actually right around here. That's also where the 390 level is, that we're kind of bouncing directly off of it. So yeah, I'm not saying we're going to go higher either. Again, I really don't know. My Google trade's actually doing okay, though. But again, it is possible. Like, here's the volume weighted average price. It is possible we do something like this. Okay, so say it is possible we do something like this. or whatever you want to look at. Like that is possible. Like we could look like that. That happens regularly, in markets too. It's one of the reasons I like the volume weighted average prices, because like this breakdown here can be like a sentiment watching level. It could be somewhere like you look at sentiment changing on a short-term basis. Well, if we're crashed, if it's since 21, it's not a crash, Gabriel. It might be a bear market and a downtrend, but it's not crashing, man. A crash is a very quick 15 to 20% drop over a couple of days. That's what a crash is, right? A downtrend's different. We're obviously in a downtrend bear market. Nobody's really arguing against that, I don't think. We're obviously red on the year. We're obviously in a downtrend. But I mean, at the same time, it really is all relative to time frame. One of the things I always show people here is that it depends on what stage you're looking at the market in. So again, intraday, we're red, right? So intraday, we're red. We're right at 390. Remember that pattern I drew here too. Let's see if that plays out. So intraday, we're red. Over 180 days, we're green. So over a 6-month period, we're green. Over a yearly period, we're red. Over a weekly period, where each candlestick's a week, we're green. And so it really depends on the time frame you're looking at. You could always isolate a specific time frame to confirm your bias, right? But it depends on which direction and which time frame you're looking at. All right, remember, we drew this line right here just to show you guys. We drew this line right here, and then we said we could do something like this. All right, remember we drew that. Google's still popping up. I might take some profit in Google now. Yeah, here, look, we heard it, Andrew. Please don't say it over and over and over again like this, man. I'd appreciate it. Like I said, it's okay to plug it once. Just say it over and over and over again. One's Class A and one's Class C shares fire. So like one share has voting rights, which is GOOG. The other one does not. So GOOGL is not voting rights. So you don't have any voting rights with GOGL. So yeah, we did not reject the VWAP. We're actually right back up. And again, I might start to take some off on my Google trade. All right, so we're starting to rebound back up. Dude, you need a haircut. Yeah, honestly, bro, I went and got my haircut yesterday. Let me tell you this story, bro. I'm still kind of mad about it. I went and got my haircut yesterday. And so I go there and I tell him I want a 4 on the sides, finger length on the top, like I normally get. I've been getting the same haircut for like years and years, right? So I go there, I tell him that. So he cuts my sides a 4, and then whoever the lady was there, she talked me out of getting she said a finger length would be too short on the top. And so then when I say, okay, well, what goes well with a 4 on the sides? And he goes, I don't know. Every haircut's different. And so I'm like, okay, well, like, I don't know anything about haircut length or anything like that. Like, I'm not a hairstylist. So like, what do you want to do? Right. And the dude goes, oh, well, we're just going to trim the top. And so I'm like, all right. And then I get my haircut, and my wife and my daughter are like, man, what did they do? And I'm like, I don't know, man. They left it super long. Carol's going to have to end up cutting the top of it for me and just trim the top. I'm kind of nervous about it, but she said she would cut the top for me and just take like half an inch off or something like that. Tell me if that's a bad idea here. Should I stream that? Part of me thinks I should stream it. I should have just gone, I should have stuck to the same barber. Is SIVB open? No, it's still halted. Okay, good. Stream that, yeah. That's a bad idea. But if you do, definitely stream it. Honestly, I'm thinking about it. I don't know yet. But yeah, now basically the hair is really short on the bottom. But like the top of my hair is like really long on the top of it. So it's like short on the bottom. It's short on the sides, long at the top. I don't know what to do with it now. I can only laugh at it really at this point in time. And maybe it's karma, because I told the story about the Walmart haircut yesterday.
Yeah, I know. Me too, Pawn. I was like, man, is it open? Yeah, that way y'all can laugh at me too. Hey, listen, at least we'll be laughing together, honestly. It'll be good content-wise, you know. If I'm going to run a stream, I might as well let people laugh at me, you know. Bell notification on that stream. Hey, hit the subscribe button, guys. I'm not going to do it. Carol's actually cut my hair before, and it didn't turn out the worst. I'm not going to say it turned out good, but it didn't turn out as bad as you might think. Is that a VWAP rejection? It might be. Let me see. So the VWAP is right here. So the VWAP, let me look. Hold on. Let me look at the SPY. Hold on 1 second. Let me see. So yeah, the VWAP is right here. Let me draw it. The VWAP is right there. So this is a VWAP rejection right here. That's a VWAP rejection. Bro, I went back to the same place I went before, but they had different people there. Give Walmart another shot? Nah, lesson learned. Never again. Never again for the Walmart haircut. I might start shorting this a little bit here, though. I'm going to start shorting this here. We'll add up to maybe 3 contracts at the top. All right, so there's 3. We're not going to add any more. If we bounce back too much, we'll cut this. There's a flush back down. Yeah, we're gonna have to cut that. Still up over 100 on the day, but we took our swings, you know. Google bounced it back over the previous closing price. I still haven't taken any profit on it. So you can see we hit the VWAP again. You can see the market kind of rejecting off of the VWAP area. SPY bouncing back up to the VWAP here. All right, so we just made about $112 scalping the regular E-mini here. So you can see we're up about 130 on the day on the short side, rejecting off of the VWAP like we normally trade. Hair goes back, you know. Like I said, the haircut wasn't bad yesterday, but she left the top way too long. And I've got really curly hair. Like my hair is actually really curly. You can't tell when it's short, but my hair is actually really curly. But like he left it too tall. Honestly, he was kind of rough with it too, man. He was hitting it, man. It hurt. All right, so we're right at 389 now for the market. Depends on which platform you're using. I mean, any futures account on Top Step will let you trade the E-mini, man. Honestly, bro, I thought I had it down, bro. I would say 3 or 4 on the sides, depending on how I wanted to do it. Finger length on the top, and flat in the back. You know, that's what I did every freaking time I get my hair cut. I do the same thing. It's the same thing. It's kind of short, but it's not that bad. And so every time I go in there, the same thing. But you start to realize that sometimes hair people are just, I don't know. Sometimes hair people are just weird, and they try to talk you out of it, and so. But I never know what to tell them, you know. All right, guys. So if you haven't already, like I said, check out Top Step. Top Step's really dope, man. It's really useful. It's a great way to test your skill in trading. Again, here is my week on Top Step. Here's today. Here is the last 7 days. Here is this month so far in March. So not doing too bad. We're up about 900 in March. Could do a little bit faster here, but again, I'm just so used to taking small size, guys. Don't judge me. Again, my graph looks like this. Don't judge me. All right, people can say whatever they want about my day trading. My graph looks like that. I'm also green on swing trading on the year, so I'll take it. But yeah, if you want to test yourself and you want to test your skill, maybe you're new to day trading. If you want to test your skill, see if you're ready to scale up, see if you're ready to take some size, try out Top Step. It's a funded account program for futures. So they give you a demo, and if you can hit the target on their demo, they fund you after you pass their testing. Regardless of whether you pass it, most people are going to fail it. But that's the point, is that it's so much cheaper to lose on there than it is to put up the money yourself. And so here's the link if you want to check it out. They are a sponsor. I'm certainly biased in their favor. Good luck, guys. I appreciate all the support today. Yeah, so again, we got that rejection right off the VWAP. You know, we talked about it. We said this very easily could happen, and there's the drop. Again, it's one of the reasons you don't sensationalize it either way. You know, when we start to, again, extension plays a big factor. Like, the thing to understand, like the real way we spot this type of stuff in the market, before I close it down, is that when we have a big drop like this, the market's more likely to bounce back, right? This is how I swing trade, right? And everybody always insults. Anytime I buy a stock when it's down like this, everybody always makes fun of me, right? And then we ride it back and we take profit. But extension plays a huge factor. And so it's like, I think a lot of new traders are really tempted to say, hey, the market's super weak short term when we're down here. The market's actually more likely to bounce the farther down we get, and vice versa. We rebound all the way back up here, and it's really tempting to say, oh, well, the market's really bullish now. Not necessarily. And then pullback's more likely. The reality of today is chop. Like, so the reality of today is this, you know, and it could just kind of keep going like that. You know, it could break down, but you got to wait for the breakdown to actually happen first. But yeah, I'm going to get out of here, guys. Love you all. Good, profitable week for me all the way around. Swing trading, all that stuff. So a nice little week. We'll see what happens. Good luck. And yeah, I'll see you guys later. Good luck. Yeah, Andrew, I'm going to have to put you in timeout, man. I asked you not to plug it anymore, and you just kind of keep plugging it, man. So, you know, good day to you, but I, you know, I appreciate you, bro, but like, you know, you got to respect the rules here, brother. Hope you understand, man. But yeah, good luck. Y'all be good. We'll see you guys next time. And if I'm wrong, maybe you're not plugging somebody, maybe you're plugging something. Either way, good luck, guys. Good week for me. Good day to you guys, and see you guys later.